Hello, everybody. It is officially in New York, Wednesday, January 11th. Yeah, here it's still the 10th for a couple more minutes. Um, I am in a trade, so if you hear uh, the audible alerts, don't worry about it. It's just taking profits, most likely. So I'll show you in a minute. But if you want to get a hold of me, guys, on Twitter, I'm at RedBenTrader. And then if you want to learn more about using um, the system that we do to make our trades more systematic, basically, and but yet use discretion to get into them. It's basically an execution tool. And if you want to learn more about how we use these, you can give an email to my coach, Simon, whose email is trade, letter N, wordperform@gmail.com. You can ask for a 5-day free pass and learn about what we do. So, anyway, let's take a look. I'll show you my trade that I'm in currently. I actually got long here. I'll show you why. It's just a scalp, and we don't know if it's going to work or not, but I will explain myself here. What we're looking at, first of all, is the Renko chart. 24 ticks is the size of each of these blocks if they go the same direction. For them to reverse directions, you can see you have to retrace the whole area and then go another 24 ticks. So most of the time, the reversal blocks, the ones with the big wicks like this that go in the opposite direction of the previous one, they're going to be around maybe 15 at the smallest to usually less than 20, maybe 18 at the largest for points in NQ. So it's important to understand that this is a price movement based system. It is not time based. Okay. So now this one has a lot of extra lines and signals than we use in the room. If you've seen the Trade and Perform algo from my coach, this is what it looks like, and it's significantly simpler. It just has a few of the signals, but I've been working on that one for almost 2 years and have been learning how to build my own system off of that, right? So starting with the same signals, they're all still here. Like I still have all the stars and I still have the volume shifts. They just look different, right? And I've still got the channels. I've just changed the colors and the way they look, and then over time added more things. Some of the stuff that I've added, I will end up not keeping, but a lot of times, the only way to really see if you have a trade setup that's tradable is to actually put the raw numbers or the visual representations of the raw ideas on your chart, and then see if you can identify some visual patterns, right? So, for instance, rather than looking at this and trying to decipher all the actual information of like the bid ask spread and where all the trap traders are and stuff like that from a mathematical point of view, I would prefer to have this information interpreted for me and then indicating that there's something important for me to take note of with signals or colors or lines on the chart, right? So I don't have to necessarily do all the analysis. I can let the system just alert me to like, hey, this condition is occurring at this moment, and it is up to me to decide whether or not that condition means anything, because the algo is not sophisticated enough to determine where I should trade. It's not looking at things like like the daily chart. It's not looking at it's not looking for like bull flags or anything. You're right, like anything like technical analysis wise, it's not looking for any of that stuff. It's just looking for order flow. It's doing all of the work that I would normally have to do with my eyes, watching the DOM and watching the footprint. So other than that, I've still got to make decisions, right? It's not actually telling me what to do. And where to do it. It's saying if you want to get long, this would be the spot to do it, right? It gives me that signal to say if this is an area of interest, and that this condition is occurring at this time, and if that's meaningful, then you can trigger the trade in. So what's going on here, and why did I get long after this big drop? So what's happening is, first of all, big picture, we're bullish, right? We've been bullish for a bit. Here, I'll show you on the chart that everyone recognizes. Hold on. NQ. Okay, so we'll do the 30-minute chart. So we've been bullish pretty much since like Monday, right? So the end of the day Monday. Here, Monday we had a big rip and then pullback, and then we opened here on Tuesday and retraced a big part of this, right? So if we take a typical fib tool and we draw from the top down to the, I guess it would be this low, right? The one that the regular trading hours low here, or at least the, not necessarily, I guess it is the low, isn't it? Yeah. So it made a 50% retracement in like the first hour of that whole move, and then to the high after hours, it was like a 61.8% retracement. And so that's very natural. That's what you would expect if the bull trend is still intact on a higher time frame. What I recognized and mentioned earlier in my trading video from the regular trading hours was that when you get this kind of a pullback, especially after an extension of a move, so not just an impulse wave. Here, let me back up. So it's not just, so the impulse wave can get big pullbacks, and that's normal. I'll find, like, you don't know it's an impulse wave till after the move happens, but let's say, let's call it like, let's say this one, right? We get a gap up and just a big move down, and that gets fully retraced. That's not necessarily bullish. That can still resolve lower because the impulse wave started all the way back here. And we're like, even here, if this was the impulse wave and then you got a full retrace, you can still get an extension. That's not unheard of, right? What is pretty rare is to have, so here, actually this impulse wave got a full retrace. Look, impulse wave on data, and then full retrace, and then continuation, right? So once you've had that move where they trap all the sellers at the bottom, when people like second guess the impulse wave and then they get the extension, if that then continues after a period of consolidation or another pullback, so if you get a second or I guess third move, right? So big move, some kind of rest or pullback, and then another move, and this move here gets a bigger pullback proportionally than what you saw after this move here. So see, this move here had like a gentle rest time, correction time. This one had a correction in price, right? So just like a liquidation of that last rotation of the trend. You should assume that the next move up is not going to make a new high. So that's just kind of a, pretty sure it's Wyckoff. You guys, I've been doing this for so long, like I don't even know like where some of these ideas come from, but it's just how it works. I'm sure I'm not the one who figured this out, but it's a theory that I subscribe to, and I don't know where I learned it. But somewhere over the years, that was instilled in me, and I see that all the time. So once you get this big pullback, and this was not the very first impulse wave, but instead was a follow through of a trend, and especially if this follow through move did not have as much bullish volume as the wave before it here, right? If this one had all the volume, now in this case, this one was actually pretty weak, right? The impulse wave had volume, but the first extension was pretty weak. And this one actually looked pretty healthy volume wise. But if that's reversed, then this is likely the high or the end of the move. But when you do have a decent amount of volume that comes in here, but it's not necessarily at the very top. See how this volume is actually here, and then they had like a divergent. So on a here, I'll show it to you on a smaller time frame. You'll see it. I forget some people can't like. If you haven't been doing this forever, you can't see this without actually seeing it. So here we'll go to a very small time frame, like a 3 minute, and so we'll look at tiny little rotations here. Tuesday. Okay, so if you look here, now that I've split these up into smaller rotations, what you'll see is the volume for the last move here. It had significant. It had more, or at least good enough volume. Like it wasn't really super weak, right? But it wasn't the strongest of this move. It's not where most of the volume was for this entire move, but it wasn't like dead, right? If we didn't have this one, I'd be like, oh yeah, super divergent, definitely retracing, look for a short. But when you get this, you don't know for sure, right? Like this wasn't it's not like really low, but it's certainly lower than this one, and it's lower than this one, right? Volume wise, you can see volume's dropping, prices increasing. You're probably gonna get it's not just gonna keep going. It's gonna have to rest at least a little bit when you see that. But if you back up then and look at the bigger time frame, so that's on the tiny little time frame, you'd know like, okay, this is probably going to retrace. But then, what the heck? Okay, then if you do the same thing on here with the same concept, right? You've got impulse wave was a little on the weak side. Then we had continuation. It got weaker as we went, right? And then we got a big volume push here. See that? So a lot of the volume was on this bar right here of this entire move. Well, look what happened to that bar. It got fully retraced, right? And then overnight, we actually traded under it. So my first thought there is that there are trap traders, trap buyers up here. And if they get an opportunity to exit at break even, they probably will. Right? So my expectation was we're going to get some selling up here somewhere. It's not always exactly on the voodoo range level, but I had a sense it was going to be somewhere around there, right? But then at the close, we actually got a close at the high of the day, which was a little bit deceiving, more or less. Right here, see how it went just a little bit higher than this one, cleaning out all the stops from the day and ending on a strong one, and then Asia pushed a little higher, right? So that's what we've seen so far. So I want to be very clear that at that point we should expect some kind of a pullback. A pullback would be very natural there, and that pullback may be significant, right? So you don't know at this point like where it's going to bounce. I wish I could tell you that, but I don't have a way to know exactly where the first bounce is going to be or where the low is going to be. But at this point, once you get this spike that kind of looked a little bit concerning, and then a close above it, you know they're going to get some sort of a pullback. They're going to try to shake out these longs, and it might go significantly lower, but that eventually we're probably going to get back up here. And I say that because on the bigger time frame, it's still bullish, right? Like we're clearly making higher highs and higher lows, and we're developing volume higher than we've been for a while. Look how we've now, you could say, accepted. It's more obvious on the footprint, but we've accepted these spikes. See all these spikes back here that like got rejected. We've now pulled back into that range. And that it's like pink down here, right? And we've now made that new support more or less, right? And we're trying to do the same thing to this pink range, which was important earlier, back in December. It was an important spot where we spent some time and developed some volume, tried to spike over it, and then gave it up. And then the first time back in, if I remember right, we did sell out of it. Yeah. So we sold out of it here, meaning that there was liquidity above it. So that voodoo range level at 11,223 should have a magnet on it, right? And it gets hit here, right? So they cleared all that liquidity out all the way up to here. So that was repaired. That whole area was totally repaired. But look what they left up here. They did not get beyond this. They didn't get to the 11,392 voodoo range level. See that? And then when they came back to clean it up, it didn't hit it either. It ran into this red zone, which is another like previous pivot. But look at how it missed it by just a hair. See that? So it's unfinished. There's a good chance that there are stops up here still, and I do expect that we will get there. But the market's not going to go in a straight line, right? You can know that the eventual goal is for the market to get up there, but to do it, they need to refuel along the way, because if you just have buyers coming in, it's not going to work. You need to at least make it look convincing that it might break down. So you're going to get these pullbacks, and you're going to get them after smaller time frame liquidity grabs like this. Okay, that's just normal. So how far could this go? Well, the obvious way to do it, you can just draw fib from the low to the high if you want, or maybe to the high of the session, the New York session. Which one you do is up to you. But let's do the New York session. So the New York session having a 50% retracement, which would be supernatural, like totally natural, not supernatural, like unnatural, would be 11,191.50. So that would be like the first place to really think that we might get a bounce that survives. If you were looking for something that really ripped, that's where you would look. And then it could go as low as 11,169 and still be very healthy, right? So that's a pretty significant retracement. So then you'd say, well, then why are you getting long here, right? And I'm getting long here not targeting something much higher. I'm getting long actually just targeting retracement back to this previous support. Okay, so that was a little bit long-winded way to just say, I think for the moment we should expect some balance to bearish, but that in the bigger picture we are still bullish. And because I'm so zoomed in here, right? Because this is that local high, and then these are those supports. And again, it looks a little bit constricted because this is just range. It took a long time, but we didn't really do anything, right? We didn't go anywhere. But we got this significant pullback, and we pulled back right into this previous point of control from Friday, and they bounced it. See that? And they bounced it with heavy volume. Now, this does not always produce an immediate lift. So this trade may fail, right? And I was watching this smaller time frame to see if we can get a dominant bull wave, which they may fail to do, and I could get an opportunity to get out of this trade a little cheaply. I'm down $145, and that's about 1, 2, 3, 4, 5. Like not even like I'm down about 3 points on the trade, right on NQ. So it'd be a little bit early to give up now. But if they aren't able to overtake this, it's probably not going to do much more. One down bar wouldn't necessarily make that impossible, but a few of them would, right? The more down bars we produce in a row here, the harder it's going to be to dominate this big wave down. But the thing is we had so much pressure into this low on this tiny time frame, but on the higher time frame, that down wave is very, very insignificant. See that? It didn't even overtake this high, which is indicated by this dash. So if you put a line at that high of that up wave, it'll correspond with this dash, and that down wave didn't even break it. See that? It was really weak on this time frame. But on the small time frame, look how severe it was compared to the previous ones. Right? So on a tiny time frame, you've got shorts piling in at the local low, yet on the higher time frame, it's like a meaningless amount compared to how much buying there's been in the exact same spot earlier. Look, same exact location. See that? And that's this. So if you just imagine this just like, I mean, you can use any analogy you want, but it's like you've got clear on the bigger on this 24 tick time frame. You've got clear dominance to the upside, and this area has already been fought over here. We had a clear attempt here. I'll back up a little more and show you. Let me just erase the lines. We had a clear attempt to take that level. The Bears had an opportunity right here to take this. Right? Look how they traded. They tried to reject out of it twice. We got over it. They took it back, right? And then we had a divergent bar with a ton of volume, or a volume anomaly, the pink. And look what they did. They came up to it. They turned this green area into support. They got a big seller to come in and commit, and they wrecked them. See that? So when they do that, when you trap those bars, when you trap these X's and you get above them, especially at important levels, as long as you're going with the trend, that area, we know, becomes support in the future, right? So it's very natural for this to produce a support in the future, because this guy who got super short and got wrecked, he's going to be a buyer now. He's going to be forced to be a buyer when the market comes down there, as long as on this time frame the sellers haven't taken control. Well, compared to what he was doing back then, have the sellers taken control? No, not at all, right? Not even close. So we got the smaller time frame to entice sellers to pile in, yet on the bigger time frame, buyers have clearly already defended this area. So, oh, there we go. I hit my first target. Yeah, the moral of the story is you can buy this, but realize that you may not go to the high, right? The buy is for a 10 to 12 point scalp. And if you want to hold runners, you can, but it's not always going to work, because eventually this does retract. Eventually we know that this is probably going to pull back, right? But just the way the market works, it does not go in a straight line. And so you usually get that one bounce, at least, sometimes more, out of those locations with that pattern. So it's not like a way to know for, you're not going to be guaranteed or anything a 50-point move. If that's what you're looking for, I can't help you there. But 65+% of the time, you're going to get 12 to 15 points, and that is pretty powerful if you're trading 3 contracts. Hit it. I'm trying to get out of another one. Ugh. Come on. Push. I might just have to drop it, because they're rejecting that level. Okay, let's get out. That's fine. I got, up a quick, clean. I was just watching the Dom and so up 440. And my risk on that trade, wow, there it goes, hitting the target. So I wanted this little line right there, and then I would have had another one right here at this line. And I just kind of exited because I really didn't feel like giving back. But my entry there was around. I know it's valid when they defend this level, especially with an algo here with like some kind of signal. And so that's like 11,253, let's say. The full stop where you have to be out of the trade no matter what is like a point below this. So the low is like 39.50. So let's say we'll even say like 38, right? So it's not too bad, right? Like 15 points or whatever, like that's reasonable. I can take a 15 point risk and make 12 points. See, because that was 53, and so I took some a little early at 8, and then and then the rest was out just before 63. So um, I got like 9, let's say, on it. And if you're gonna be right, 65 plus percent of the time, see, it would have actually got me if I would have been a little more patient with it. But if you're right that often, you don't even need to get 1-to-1 to make that a winning trade over time. It does help if it usually gets you 1-to-1, and it does. But like I said, I was just being a little anxious and didn't want to get distracted and miss an opportunity and look like they were kind of on the. This is the reason I use the algo, honestly, because if I watch the DOM, if I try to see this right and watch like the movements up and down and up and down, it's very easy to get enticed into oh yeah, I gotta reconnect this. It's very easy to get enticed into thinking you see something, but it's on such a tiny little time frame that it's not even meaningful, right? So look, it did hit my better target, so I should have just left it alone. But against my better judgment, I just figured I'd dump it, because on the DOM what I was seeing is what looked like weakness, right? But if you think about it, the DOM is like a really tiny Renko chart, right? It'd be like looking at the like 6-tick NQ chart. You're going to see every single little wiggle and make it meaningful to you. And if I turn this chart here, I'll show you what it looks like. If I turn this chart into like something obscure, like 7-tick, right? So not even 2 points to make a new Renko bar. This will take a little while to load, I bet. But look at how wild this looks and how much noise you get. I'm not saying it's useless, but like here, I'll show you basically what, I mean, I didn't actually see these signals, but what got me is this, right? I saw the volume shift down and what looked like a little bit of a momentum, and that was enough for me to just say, hey, I'm out of here, right? So on the DOM, it looked all good. It looked very healthy here. And then all of a sudden it's like, wow, if this is the top, it's gonna drop here. There's a sign of aggression. But the truth is that the trend was clearly up, right? And all the volume was to the upside. So even on this tiny little time frame, that little aggressive signal really shouldn't be enough to spook you out. But if they take that level back, so what I should have done is if I saw this, rather than just exiting, I should be like, okay, as soon as we make a new high, I'm going to put my stop here for the rest of my trade, right? Once we break through this level, and then as they do break through, I can take out a little bit of it, and then if they come back through here and they take this level back, then maybe I'll be done with the trade. But to exit it aggressively when there's really not a huge risk that this is just going to magically reverse, because bears haven't done anything other than get trapped over and over again. Every time they put in an aggressive bar, the next bar traps them, right? So why would I think that this one does any different? And it doesn't. But on the DOM, it looked pretty scary. And that's just the way it goes. And that's why I use the algo and not just the DOM, because this is such a tiny little time frame that you're going to see so much noise, and you're not going to be able to tell the difference between this red diamond and this red diamond, because there's really not that much of a difference between them, right? You just have a lot of noise. But if you can instead adjust your risk tolerance or your size, if necessary, if you're feeling that anxious. I'm trading with 3 contracts, and that's a little more than I'm comfortable with when I'm not fully focused. That's really what it is. You can see on this, if I waited for this bar, this time frame, it's not really a time frame, but like this level 15 tick to give me a signal before I exited, this is like not even anything to be concerned about at all. It doesn't even close bearish. And then this one is the first one that even has any sign of aggression, right? So if I wanted to wait till any sign of aggression, I still get out at about the same level, but that doesn't always happen here, right? That can happen way up here. And if instead I say, okay, once I see a sign of aggression, if we break that high, I'll put a stop underneath the low. If I do that same exact thing, rather than getting stopped out here, like I would have if I was trading the 7 tick, my stop would go like here now, as long as we break through this high, and I'd probably fill my 15.1 to 1 target, most likely. And if I didn't, I'm still not risking basically anything. Because at this point, I mean, I did have a 15-point risk initially, but once it gets over this high, if I can trail my stop all the way to 11,254, I think I got in at like 48 or something. So it's a winning trade either way. It's like literally above break even relatively quickly just by trailing my stop based on the 15 tick. Now instead, if I wanted to like trade even smaller size, I could do the exact same process but on the 24 tick. And then I'm going to be able to stretch my trade significantly more. And you can see here, we haven't had a single down bar, right? So if I'm trading with the trend, for instance, and I expect a higher high, once I'm in the trade, I'll just stop looking at this because it doesn't even matter, right? It does matter here because we're trading counter trend. But if you weren't trading counter trend, like if you were trading yesterday, or even here at the end of the day, there was some bullishness. So let's say you're here and you're like waiting for a breakout and you're like, okay, here's my breakout. If I get a pullback, I'm going to buy it, right? But maybe I want confirmation on this time frame that I have an opportunity. So perhaps, let me get back to it. So perhaps what I would do is I'd wait for a big sell wave here to get reversed with a sign of aggression like that. And then say, okay, I got a nice big sell wave. It was not dominant compared to the previous one. It's still bullish, and they're defending it. And the higher time frame, we already had this breakout, and this is a pullback. It's probably a good time to get long. Okay, I'm just not even going to look at this anymore once I'm in the trade. I'm just going to go right to this chart, and I'm going to say I'm not scaling until I not only get a sign of aggression, but they reclaim that level. So watch, bullish, 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 still not drilling, bullish. There. Okay. First sign of aggression. If I'm trading like an Apex account, I'll probably take half off just to be sure I don't fuck it up because the trailing drawdown is really frustrating. But at this point, I'd be like, okay, as soon as we break this high, I'm gonna trail my stop to whatever high or low they put in, assuming that there. So that'll be my trailed stop. I don't do it yet. I wait till we break that high right there. Okay, now take a piece off if I haven't yet. Trail the stop to under that and just hold it as long as you're comfortable, right? Now, it might get hit. Look at that. That sucks, right? It might get hit. That's bullshit right there. And that sucks. That's just the reality, right? But you get the concept that it was the time to move the stop was correct. It's just perhaps there might be some more specific rules, like if you have pink bars over here, it may be smart to put it underneath the pink bars at that point, because those are likely to get retraced if it starts to go sideways. So your stop would be like there, right? Then that would survive. Perhaps perhaps there needs to be a little bit more or something. But the idea is then you could do it again. Let's say that didn't hit you, or you got back in as soon as you saw that it swept your stop. Well, once you get this high, right, broken, if this low would have been higher, you could then trail your stop again, and the same thing would happen here. You break this high. Well, now your stop. Are there pink bars back here? It's already been retraced. See, that pink bar already got retraced. So I'm gonna put my stop basically right under this, because I wouldn't even take a trap back in trade now. And then yeah, you're good to go, right, till like the end of the day. And look, it does it again, right? It breaks over the high. So we had an apex, and it breaks over the high right there. See it? Breaks over the high. So if you can, take a little bit off, and then move that stop, I guess, underneath the pink bar behind the apex. Let's try that. Right there. Okay, so I'm banking. What is that? I was in at like 11.1. Wait. No, it was this one, right? Was it this one? Yeah, sorry, the cat. 11.125. I'm banking almost like at least 10 points on the runners. So I have zero risk, and worst case scenario, I make 10 points on the runners. And there we go. That's better. So see, it pulls back, and it makes a higher low. Oh, and then it stops out anyway, and I wouldn't want to be in the trade at this point. Now, does it recover that and do it again? I don't remember. Probably. It does. So if you want to be baller, right? F the 10 points and leave your stop alone and just pay yourself as it goes higher, right? And just do it the right way. But if you need to trail your stop because a lot of us psychologically it's just really hard to hold trades with a lot of risk on them, you can this is the best way I know how to do it, right? That only works if you're trading with the trend. Okay? If on the other hand you were trying to like fight this trend and you're like, okay, here's my entry, here's my stop, and then I get a low here, and I'm like, okay, I broke that low, I'm going to trail my stop to here. Like, that, there's really no reason to do it that way because that stop's going to get hit no matter what as soon as that trend continues, right? So instead, if you're trading counter trend, what I would recommend, or what I do anyway, is I just take profits as we go, and if I miss out on some of it, fine. I don't hold the runners all that long because no matter where you put this, it's going to get hit more often than not. You're just giving away profits because you're trading counter trend. Once this pullback is done on this time frame, it's going to go back to doing what it was doing before, which is trending in the opposite direction, right? So we should always expect that. So that's why it's so important to know when you're trading counter trend and when you're not. Okay. Well, what happened to May? There we go. I don't know how that happened. That should fix it. Alright, so anyway. That is how I'll do it. Oh, I see. I moved this one. Not the other one. This one. So we have London Open just occurred 17 minutes ago in here, right? Just as I exited the trade, that was basically London Open. I very rarely will hold trades through a market open. It's generally not a great idea. Unless you're already in profit and you've trailed your stop and it's just runners, I guess that's okay. But generally I won't do it. In this case, I left it, but yeah, just chickened out of it right after. But it's generally not a good idea to leave a trade on as a market opens. You're going to run into new participants that might not even care about the time frame that you're looking at. They're trading on something far larger, and so all of a sudden location and things like that matter a lot more. So notice this support that I marked. I don't remember if I explained this or not. Probably not. But this support was marked earlier before I took the trade, and that was my line in the sand where if I got that price, I must be out of the longs and no longer looking long. As you can see, it didn't actually hit it. It got close, but didn't quite hit it. And so if I would have seen this get that close and then reject and give me a down bar, I'd just exit. With a counter trend trade, I'd just be like, good enough, I'm happy, right? So just to be clear, that's is that what you're supposed to do? Probably not, but that's how I do it. I'm not the best at this, right? I'm really good at explaining it, but actually executing it the way you're supposed to is way harder than it sounds. When you actually when just doing it all right and handling the emotions of keeping things consistent it's really tough. And so oftentimes I will find shortcuts, ways to limit what I feel like is limiting my risk. But the truth is over a long string of trades, the very best thing to do if you can is just leave your stop alone, and let your targets get hit or not. By far, everybody there's a number of people in the room that I trade in who have been doing this for a lot longer than me, with this specific system, and all the couple traders who consistently do really well, the two things that they have in common, their trading technique is slightly different, but the two things that they have in common, all of them, are they hold their trades to target, at least runners, and get paid as they approach them, right? And they don't trail stops, they just lead them where they initially put them. And so sometimes their trades roll all the way back on them after they are in profit, and that's just the way it goes. But when they are right, it gets monstrous moves. And then the other thing that they have in common is they actually all trade unidirectional long, which is interesting, right? Because I've never been one to be long only. Like the idea of being long only is like it I don't know. It feels like you're missing out on something. But the ones who really kill it month after month after month in the room, even last year when it was clearly a bear market, they've been the long only traders. The ones, those of us who like to switch back and forth, we make more mistakes. I think that it's not so much that the shorts don't work, because if they didn't work, I'd stop doing them. Right? That's not really the problem. It's that when you have the potential at any time to switch directions, the likelihood that you are analyzing the situation completely wrong increases significantly, because you're biased to try to get yourself paid. Whereas when you're long only, it's like exactly, you're only looking for this certain pattern that looks exactly the same. You don't care about anything else, right? And you just wait for that, and being consistent becomes a lot easier, because you don't have to constantly ask yourself, is there a short? Am I missing an opportunity here? Or should I just wait for the long? If that decision's already made for you and you just automatically just skip the short and wait for the long, and then you have a long setup that can pay you really consistently, it literally is just a matter of waiting for that setup to happen and executing it properly. So if you practice that over and over and over again, what I've seen other people do, those guys do really well, right? But it takes a very special person to be able to ignore everything else and just wait for that setup that maybe comes 3 times a day on a good day, but pays you 2/3 of the time, And so like they'll just day after day, it's just like, and because of that, they can trade relatively high size, right? So like it's not unusual to see some of them like having days where like they've got 5-figure days, as like a normal, like, oh, it was a good day today. It's like, oh my god, wow, I'm lucky if I make that much in a month, and like they literally took like 3 trades, they were all winners, and they're up 22K or something. It's just like, fuck, what am I doing? And they make it look so easy, right? Because they just wait for that certain trade, and sometimes it doesn't come and sometimes it does. Whereas I'm sitting there trying to be like, okay, let's analyze this. Could it just be a short? No, I don't think I want to short it. Maybe I'll just wait. No, it's a short. I'll short it, and then it's wrong, and I'm like, fuck, I should have waited. Now it's setting up long. Do I really want to be long here? Right? I've constantly got to ask myself back and forth. And they're just like, I'm waiting for a long in this area. If it sets up, it does. If it doesn't, I just wait a little longer. So it takes a special amount of patience to do it. But man, they are specialists at their craft. And I'm not saying they don't have down days. They do, but yeah, and their down days look pretty scary, right? From because my risk tolerance is not, my account size isn't the same as theirs, so it's just like, wow, I can't. While I the idea of making 22K in a day, like when I see their loss days and they're losing 20K in a day, it's just like, wow, that's and they're disappointed, but it's just like, okay guys, see you tomorrow, and like acting like I do when I lose 2K, but it's just proportional, right? Like if you have a system that pays you consistently, it shouldn't really matter how much you have on size-wise, as long as it's a proper proportion so that you can survive the drawdowns that are inevitable. But anyway, huge tangent. Just an observation I've had that if I want to get better results, the best thing to do is to probably drop the shorts and just wait for the longs. Now, the real trouble for that, for me, is on days where if this is the bigger time frame and it's doing this, but trend down days, I will get more and more aggressive trying to catch that low and fuck it up if I can't go short. Whereas if I have the freedom to just look for the short, I will ignore the counter trend trade until I'm positive that I'm ready, that it's ready, right? But really, what that is impatience. Like I just want to be. I don't want to miss out on that opportunity to take the short, Whereas the long only traders who kill it month after month, they don't care that they're missing the move, and they might not even get set up. Like it could literally go to the low, turn around, and rip all the way back up to the high, and they might have nothing to do, right? And that's where their job is hard. Whereas where my job is hard is dealing with the fact that I just took 3 stops in a row going counter trend, and now I have to decide whether or not I want to join the trend, quit for the day, or keep fighting the trend, right? Like I've got a lot more decisions to make than they do. Theirs is just, did it set up or not? So, but it sure is hard because I've tried just to sit there and wait for that setup and then see the market reverse, know that you've sat here all day without taking a trade as it dropped, and you know the short setups, but you're ignoring them on purpose, right? Like I can see them and I see them working, but I'm not supposed to take them, right? That is hard, and then it reverses and you miss out on it. I'll tell you, like it's not hard to just be like, fuck it, I'm chasing or whatever, right? Like you just go on tilt. And that's that's not good. You gotta if that happens, the result is you leave, right? You walk away, but and you get out of your trade. But it's no matter what people tell you, it's not nothing about this game is easy. Simon, my coach, likes to say it's the hardest way to make an easy living, right? The hardest way to make an easy living because there's lots of stress. And there's lots of and like unknown. There's very 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 little that's insured, right? Whereas like if you have a regular career, like I go to work 4 days a week. I work the weekends, like just so that I can trade during the week. But I got a salary, right? And I know what that salary is going to be no matter what, as long as I don't like go on vacation or something. It's the same no matter what I do. Even if I perform very poorly, I'm going to get paid, right? And I'm certainly not going to have a negative day or a negative month in my job. But with this career or this technique of making income, you not only might not make money for a long period of time, but you could give back everything you made in like a moment or less, right? Just by deciding to do something that's not part of the program. And that's another reason why if I don't have access to the algo, I just won't trade at all. Like I won't even open the DOM if I can't see what we're doing on this algo, because even though I know how to trade with the footprint, like I could do it, right? Like I mean, once you learn how to do it, like that's not going to go away. But the level of stress that I deal with trying to interpret all this information, it's just not worth it. And there's no way that I could trade the size that I really want to without having this confirmation that yes, that aggressive trader definitely did show up exactly like you indicated to the condition was true at this point. So I don't have to keep on second guessing and say like, okay, is this the low that I want to short? Like, should it be this one, right? Because on the footprint, on the NQ footprint, it's that white line right there. Like, it might not be super clear. Is it this one, or should I wait for this to get taken out first? Or maybe I can get short a little higher. Like, it's not obvious. Whereas there's no question on the algo that it's like, okay, if I'm trading this time frame, this guy was clearly the one that put in this push, and look at all that volume that it took to do it, and then look over here and see how weak that is compared to like dominant waves, right? Like that's not what you want to see if you expect this to become a new trend. It can't take a ton of energy to do like whatever that is, 15 points when you've come down 50. Like that's not gonna work. More often than not, that's not gonna work. Um, and so if you don't, if you can't see that, because I don't know, I mean, to be honest, like that's not super clear to me here. I might see some hints to it, like there, you know, there's like this attempt to flip the bid ask spread, and you can sort of see that they didn't really get any like continuation up here. All the volume is lower, and so my assumption would be if we get under some of this big volume, it'll probably become resistance. I can see that for sure, but knowing where do I put the line exactly, like how low do we need to get? Like, can I short now? Or, and then if it turns around, do I get out of my trade? Like, where do I risk off of, right? Like, all of that stuff is ambiguous. Whereas with this system, it's like, okay, that's the low. If you want to be bearish, they should break underneath this. And then if you get an opportunity to short out of there, you probably can, right? Um, and if it doesn't work, I can then go back and say, well, let's see if I can find this exact same condition, and let's see if it worked the last 20 times it happened. And if it didn't, well then maybe I need to retool that setup, you know. Whereas if it worked 17 out of the 20 times, but this time it didn't, it's like, okay, I'm doing everything right, right? And you can build that confidence to know that the problem isn't necessarily you. It might just be you don't have enough trades in your journal to prove that to see what the to see those odds work out, right? But if I don't have these conditions defined, like I can't even, I don't know how long it would take me to find this exact same picture somewhere else. Like I could just flip somewhere else and be like, oh yeah, that's kind of like that, you know. Like I mean, who knows, right? So whereas on here it's probably nothing like it. Like up here it's like, I mean, it is a little bit like it, but you wouldn't know for sure, right? Unless you actually had the algo. So that's just not to like, I don't know. That's just how I feel about it. Is that even if it's a lot, right, to look at, you don't need it all, but having something is way better than having nothing. Having some whatever you want to use, right? Even if it, like, some people, like, even this is like too many signals for them, and so like they turn off the triangles, or they turn off the, you know, the lines, and they're just like, I just want to know when there's a blue cross, and if that happens at support and we get under it and retake it, I'm just going to buy it, and I'm just going to do that all the time, right? And it's and then I'll do the same thing in the other direction, and I'll just trade like that, you know, from now on. And so, like, you know, if you took that technique, it wouldn't matter where the lines were, it wouldn't matter where the stars are, none of that stuff would even come into play. But even with just that one technique, you would see, okay, is this a support? Well, if it is, we should get underneath it, and we should be able to retake it, right? And so once we've retaken it, I can buy it, and it should be a continuation of the trend, and your day's done, right? Yeah, and then if that never happens again, then you lose nothing. Okay, here it is again. We have what could be support. We do get under it. Can we retake it? Oh, it's right there. So let's see. Can we close a bullish bar above that? Not yet. Right there, we do, right? It happens right here. It's a pink bar. I'd probably prefer to get it long on a pullback. I probably wouldn't get one. Here we go. That's where I'd want to get long. Or lower. So that one might fail the first time, but then this one would get you in. So one, or let's see, that one doesn't trade below. Here we go. Right here, needs to go under it, which it does, and then it needs to break over it after that. Happens right there, okay? So let's just be aggressive and just buy it. You do fine, never even go, like, zero max adverse excursion, right? And so you're two for three, and the loss was like a 18-point loss, and the wins are like a 150-point wins, right? So it's you can, I mean, and that's literally with one algo, one simple setup that I literally just made up by looking at it. Like you can you could just see it and be like, okay, that works pretty damn often as long as I know the direction. So let's just see what happens, right? Let's just do that for a while and see how that works. And yeah, all of a sudden you that's how I started, right? And then all of a sudden I'm like, hold on, when I have that same condition, but I also have a big volume bar that's like occurred earlier or lower than that, then that one works even more often, right? And so that's where I ended up adding these other signals. Is it's like it almost becomes like addictive just to just to build those patterns and go back and see like how often would I have been right. Obviously, past performance doesn't equal future performance, but it's all I have, right? Like I don't know how to figure out what's going to work in the future, but if I can tell what price action looked like in the past and I can see what worked back then, the best thing I can do to improve my odds is to look for those same conditions in the future, right? And I mean, obviously, it's not guaranteed that it's going to do the same thing, right? It might not be that like you could back test it for 100 years and it could be 70% accurate, but tomorrow it might be 20% accurate. Like that is true, right? Probabilities are just probabilities. Like even if something's good 70% of the time, like 30% of the time, it's still going to not work, right? So you still have to manage risk. All that stuff doesn't change. It's still trading, right? But the all the guesswork is taken out of it, and instead it's just find a setup, find a pattern, trade the pattern, and then the results are just like produced that way, right? Rather than having, I don't know, it simplifies the whole process like in a way that I never thought was possible. So it's something I would not trade without it. Okay, so let's see what we're doing here. So I got in here. We got that little bit of a scalp. They're trying to pull back. Did we put in a dominant wave? We did. They actually pulled off a dominant buy wave on the higher time frame. I actually didn't notice that. This one we already knew was dominant. See that? They did not break the low. So what we really want here is for them to actually take the low out, but do it with a divergent wave. That would be ideal, because then we would know for sure that this low is secure. I'm not a huge fan of buying the first higher low. It does work sometimes, but yeah, it's pretty aggressive, right? So where I'll buy higher lows is once you put in an apex here. So after this bar closes, you'll see one of these little flags show up on this high. And so if we can close above this little swing high, if we can close a bullish bar above that, and then they make higher lows, I'll buy that one, right? I'm also cool if we break that one. Hold on. If we break this and close above it, and then we do something like that, I'll buy this one too, as long as it's a higher low to this one, right? But what I would prefer is first to break this low and making a lower high and then making a higher high. That would be better, because then wherever we pull back to, so if we do this, and we expand the range, maybe not the first one, but one of these in the future is going to trap and do it again. A lot of the time. Again, is that Wyckoff? Like, it probably is. I don't know. I couldn't tell. It's like a mix of all sorts of things. But that's how I see markets work. Right? The best. Obviously, they don't always work like that. But when they do that, it's a lot more predictable. And so if I can get this low taken out, I'm a lot more comfortable. But one way or another, the clear sign that that this down wave is temporary is to now break and close above this. So the I think that's actually unlikely to happen, to be honest. Like I said before, I think we do need to go lower, but you never know when that's going to happen. One thing you can do, and I mentioned, I think it was in the video I did about the Weiss waves earlier today, is if you mark the volume, if you draw the volume profile on the wave to your apex, right? So like this is a wave to this low, and then you also draw the volume profile for the wave off of that apex. If those points of control are near each other, so these pink lines, if they're close by, then all you really need to do to get the market to go in the to retrace this, basically, not necessarily to flip the trend, but to retrace this move, what you need to do is you need to get bullish volume above both of these lines. So if we can get like a white bar or a green bar that has this yellow line above these, so I can, the highest of the two, which is this one, then pullbacks that get defended can get bought. Until they do that, I'm going to assume that they're going to go lower eventually. And that's just, again, out of experience, knowing that the market loves to push price but lag volume, and then during a trend, especially in the beginning. So if this is the start on this tiny little time frame, right? If this is the start of an impulse move down, the natural thing to do is to refuel and then push a bigger wave lower. Bigger wave lower with more volume. That would be natural. And it would suggest that we're going to go all the way down to 11,200, if not lower, if we do it. And we've already done the first step, which is put in a buy wave, get traders committed to the buy side looking for continuation, but then fail to develop any volume above the zone where all the volume was when they sold. Because if they put volume up here, those aggressive late sellers are trapped or offsides, right? If we start putting volume up here, they're going to start getting anxious that they're losing money, and any opportunity for them to buy and cover or exit the trade or just re-enter the trade if they exited it and they want to be long, they're going to take it back at this price level. So what you'll end up seeing is a dip and then a rip. But to do that, you first need to put volume up there, right? And that hasn't happened yet. So the regular way, what we usually see is anytime this yellow line gets above those pink lines, the bar is either pink or the bar is bearish. Because sellers are actually in control of volume. They're gonna let price dangle out here for buyers to try to grab onto and mark it in. They love that, right? But the moment that volume actually starts to move up here, they want to defend this level that they shorted so heavily or sold so heavily. So they're gonna push really hard to protect these bars, and these bars are all gonna close bearish. That's what you'll see. And I talk about it like it's some kind of cabal. It's not. It's just the way markets work. It's what it really is. It's not someone trying to push so hard. It's trapped buyers from earlier. It's just a fractal, right? It's the same exact thing here in reverse. It's trapped buyers who see this as an opportunity to exit and risk less or lose less. They're all off sides, and they're like, wow, price is actually coming up here, getting close to my entry from when I bought this pullback or whatever, right here, right? And they're like, I'm just going to exit, which sells the market and pushes volume lower, right? So price gets up there, but the moment it gets in there, they basically get absorbed by sellers. And so volume never actually shifts up higher. They never accept a higher price. And it's interesting because you can see the exact same thing on a bigger time frame, right? Like if you look at the profile, it's the same. It's all the same. It's fractal. So if we look at the profile, right? The ones on the left is the market profile. The ones on the right is volume profile. Look what happens during. I don't have very many bars. That's okay. I don't have very many bars loaded because it takes a lot of memory. But look what happens when volume stays down here. See how price spikes up, but the volume doesn't shift, right? The result of that is the market explores lower because they absorbed the buyers, right? They bought up there, but they couldn't develop volume up there, so price drops. But look, there was no interest down here. There was no aggressive sellers. It's like really weak volume. The moment they got under this volume build, there was just no one there. Nobody wanted to do any business there because it was unfair, right? It was seen as unfair pricing. It was too cheap. And so where did volume develop? Here. That's higher than here, right? So even if the price closed down here, but all the volume was up here, because volume is developing higher, you're probably bullish to neutral, and you'll get a push higher eventually. And then here we had a triple distribution, right? But look at where most of the volume is. The volume point of control from yesterday is way up here, right? So we accepted higher prices, but then today we put in a normal distribution day, and it was in this lower portion of the Monday price action, basically repairing this low volume node here. But look at where we bounced, right? And look at how low volume was. There was excess down there. Why? Because there were trap shorts down there from here, trap sellers, offside sellers from here on Friday, and even probably from here on like a week ago, right? When they all sold thinking it was going to go lower. If they held their position, this is their opportunity to get out break even. Or if they sold here or here and it broke out and let's say you were a breakout buyer and you bought this because you think it's going here and you get stopped out. When price goes through your entry again and you didn't get to buy it because it was a gap, what are you going to do when price comes back to that spot that you were interested in buying as a breakout? You're probably going to buy it as a pullback, right? Looking for that same target because this volume and price increasing just confirms that you were right. You were just early, right? And so you end up being a buyer here. So as long as buyers continue to show up at 11,120, this area here, it's bullish on this time frame, right? On the daily chart, it's bullish for the time being. What would change that would be putting in these prominent points of control and then coming up and rejecting and then giving up one of these volume builds. But we haven't had time to do that yet. So that's why I'm saying for the moment on the candle chart, I'm not going to be super bearish. Not when you're fighting this. You don't want to be, because there's too many sellers who got stuck in here, right? Every one of these little pivots becomes a potential higher low. And they're just going to buy it over and over and over again, all the way down until whenever it decides not to go down anymore. So I'm okay selling breakdowns or pullbacks into these volume builds. That's fine. But I'm not going to try to stay short for this whole move because it's not going to be clean. It's going to be like this. That's what it's going to do, right? It'll make a low, everyone shorts, they all get stopped out, they get long, everyone gets stopped out, right? It's the same. That's what's going to happen. It's not just going to be a little bit down, a little bit up, and then all the way down. Like we all have wet dreams about those big drops like this. That it doesn't happen like that most often. Usually, this is what happens before going down, right? And before going up, you get like these, right? You get the big down, then everyone buys the dip, and then they all get wrecked in capitulation. And then when they run out of sellers, finally the market can go up. That's what you should expect. So just don't get too bearish is all I would say. Like, it's okay to short if you know how to do it, but don't get too bearish when your chart is favoring the longs, because the chances are that a lot of the bearish setups are just going to fail, even if they would normally work, because you actually have trapped sellers keeping them from working. Or they'll work for a little while and then start failing repeatedly. Whereas the buys in this kind of condition, they're not all going to work, but a lot of them that like maybe would normally be a little bit aggressive, they'll work as long as your location is good. So like just buying a pink bar or pink diamond, for instance, it doesn't work very often, but it does if your location is right and the direction is right, right? But if I go back and I just find like a random pink bar, especially if it's not trend up, like this one worked, right? But I'm sure I could find one that didn't. This one got a lift. It's still trend up. This one worked, right? It's nice when it's trending, but when it's not trending up, like look at this. So not trending up, it's just chopping, right? Pink bar goes nowhere. Pink diamond goes nowhere, right? So it needs to be, the price action needs to match the setup. And if it's dropping like this, pink bar or pink diamond gets beat right away. You know what does work though? The inverse. The purple diamonds work beautifully on the pullbacks. Why? Because it's bearish. So, and then just over here was probably the exact opposite. Purple diamonds, totally wrecked. Pink diamonds, right at the low, money. Right? So you can use you can use that information two ways. You can figure out what direction you're going and just wait for that signal, or you can use the results of the signal to help you determine what direction you're going. For instance, when I saw this pink diamond and I looked at where we were and I was like, wow, this is this higher low is way higher than where all the volume is. And they're putting this signal says they're putting a ton of volume in here to try to hold this higher low. It's not much of a higher low to this one, yet it's a huge step from this one. The last big volume bar was to the downside, and it did get wrecked. So we were bullish, but I would not suspect that this one would work. And when it fails, when the very next bar takes it out, I can be like, okay, the bullish trend is resting. We're probably consolidating. Let's see if I can get a short setup, is what my thinking is. And so when I get the X to the downside, right, I want to ignore this one because if it was super bullish, this would have worked. And we haven't gone anywhere to make me think that any differently, right? If we would have dipped and then got this, maybe I'd take it. But in the exact same range, we get another aggressive attempt. I don't think that's going to work, right? I'm not just going to short it immediately, but when it doesn't cause continuation and we get another aggressive signal on the other side, that's probably a short, right? But then look what happens. The pink diamond creates an extension. Well, now the purple diamond created a slight extension. So now both of them appear to be working, which means it's probably consolidating. And it's likely not going anywhere. Or it's gonna beat one or the other and then make a big move. So I could put a line here and a line here and say, I don't really want to do anything in here, but if we can get beyond one of these levels and then we pull back and give another algo signal, I can get involved. And what's nice is in the meantime, I can just sit here and wait and do something else, right? I don't necessarily have to stare at the price action and be like, oh, is it bullish? Is it bearish? It's going up, it's going down. Like, I don't have to worry about all that. I've already determined what I want to do, or more appropriately, what I don't want to do. Oh, and then you can do the same thing on the smaller time frame, right? So I can say, hey, look, they put in a pink diamond at a higher low. If this is bullish, this is a trend, it's gonna go higher right away. And instead they put in a purple diamond that works. So it's like, oh, we're not making higher highs and higher lows most likely. We're probably balancing or maybe even bearish. So, whoops. Yeah. So would I want to be buying like the very next signal that comes if it did like white star right there, like in the same range, would I just buy it automatically? No. I need to see them leave the area and defend it. And then maybe I'll think about buying it. But even then, if they can't beat this guy right here, if this one is defended, it's at least balanced, if not bearish. If this zone, because that move worked before on that time frame. So he's probably going to try it again. So if he's successful again, nothing's really changed. There's no reason to think that this area is now suddenly not resistance. But I don't want to be the first one to sell it. But if someone else wants to sell it, and I see it work, yeah, I'll try it the second time, right? That's an acceptable way to do it too. Let's see. The one thing that has me nervous about thinking short here is that we put in this black dot, which is a divergent bar. So there's more buyers and sellers in this bar. If it's bearish, they will not break over this. Or at least it won't hold if they do. So this high, we should not put in another bar unless it's pink. The pink bars don't really count when it comes to this kind of level talk because they don't have any volume associated with them. It's just like the order book just gets thinned out and price spikes up. Like, see how fast that moves? Like, it's probably going to be a purple or a pink bar if that continues because there's just illiquidity. It's moving because of a lack of buyers or because of a lack of sellers. It's not moving because there's more and more of them. It's moving because there's less and less of them. So those you don't really want to count when it comes to like, did we break over a certain level? Believe it or not, it's not actually price that matters. It's volume. So if you can't develop volume up here, this is just a ploy to get buyers to buy in the wrong spot. So if this is a pink bar, it does not count. It's not bearish, but it's also not confirmation that we've broken out of this range. And I think that's something that is hard for people to grasp because it's different than all the rest of the signals. Pretty much every other signal, with very few exceptions, are like they identify with the direction they're going, right? Like if it's a star that's on a down bar, it's like it suggests that the bears are putting in aggression. But the pink and the purple bars are very different. They're very powerful, but it's not the same thing. It's almost the opposite. It's not the opposite, but it's like the sudden lack of aggression, right? So it's not the inverse, but it's right. It's not aggression to the other direction, but it's like price is going up, but no one cares. Now, if we get a pink bar followed by a bar with like a star up here to the upside, then someone cared about it once it got far enough, right? But if we turn around after a pink bar here, what that says is that we went into the zone, but only because sellers weren't interested in selling it. And that can happen 3-4 bars in a row if they want, right? If they can. If liquidity is small enough and sellers keep pulling their orders, all it takes is like a market buy of like 2 contracts to push the market 3 points up, And the algo is identifying that like, look, we're rising, but as of right now, we've seen no indication that any aggressive buyers are actually pushing this thing. This is only moving because the sellers that used to be on the order book suddenly left. Or they were spoofing, or they're moving their order somewhere else, or maybe they're becoming buyers, right? It could be a squeeze, but you really don't know until you see what happens after the pink bars. And if you see pink bars that are immediately rejected with aggression like this or this, that's usually a sign that you're running into some sort of resistance. And that resistance usually holds if you're trading with the trend. Or if you're in a balanced day and you're at the edge, which we're not, by the way, at the edge. We're right smack dab in the middle, right? So this is probably the hardest place to analyze anyway, and not a great place to trade. You're better off buying down here at the low and selling at the high, unless you think it's trending. But let's see. This could literally do like another 2 pink bars, especially at London. There's just so few participants that it just floats. But what matters is what comes after them. So let's see, can they get an orange bar? Can they get a yellow star? Can they get a red diamond? Something aggressive to the downside. Or do they just get a purple bar because there's no buyers either? Oh, interesting. So no sellers, but no real buyers either. As soon as price starts to drop, all the buyers give up. So when you see that pink bar, if this closes purple, that means that this has become a pivot. Oh, if they're not going to do it. Never mind. See, the seller's just giving up. You can't see the Dom. It's literally just lifting, right? Like no one's really doing anything. They're just the sellers that used to be there. Like there's like 10 on the ask, and like suddenly there's 7, and then there's 2, and then it's just gone. But no one's buying it. They're just pulling it. Okay, there was some buying. Okay, now they're absorbing. Yeah, so now it's not pink. See, because now we actually had some aggressive buying that got absorbed in this case. Now, can they push over that absorption? If they can, you're going to see an aggressive signal. If they can't, you won't. And if they reject, it'll probably be an aggressive signal to the downside because it's no longer, there's actually buyers in here. And so we're going to get a sign of absorption if they reverse it. Nope, so see, no signal, right? But a bullish bar, and that bullish bar is clearly above the divergent bar back here. So that would be good enough for me to say, I don't want to be bearish. I'm not going to buy it up here, right? But they did absorb the sellers. They did. They got the close up here significantly above where all these buyers were trapped before. They got it up there. So now this next pullback, we're going to look for buy opportunities. Note also on the bigger time frame, remember we marked where the VPOC was for the wave down and the wave off that pivot, and that was on these pink lines. We've put a bar that's not pink above that closed bullish. So again, indicating that pullbacks are probably going to be defended there. So if we can get a pullback into 11,255 and then a star up or a green bar up or some kind of aggression up, anything but a pink bar basically, we could probably buy it. Now we might not get the chance. They may just run it, especially this time of night. That's not surprising if they just run away. And see, yeah, never mind. It is true. I was gonna say the way I'm supposed to do things, if I buy it here and leave my stop here and take my profit and then take my profit, I still got runners and my stop stays down here, right? That's not what I did, but you can see why it's advantageous if you can handle it. But seeing all these pink bars, I'd be like, nope, I don't want anything to do with this. It's not the right thing to do, but I would get nervous because it's like they're just lifting this on nothing. Look, there's no aggression in any of these bars, right? It's gonna pull back, but the thing is they've gone so far with it, it's probably bullish, but it's gonna pull back. You don't want to buy breakouts with pink bars. Do not buy a breakout over a swing on a pink bar. Really bad idea. Sometimes it'll work, but not usually. Unless you can identify a squeeze, because that is what it looks like when it squeezes. But usually by the time you identify a squeeze and you're trying to get in on the breakout, it's like running without you. So you're usually chasing at that point. At least I usually am. So we've gotten back up to the mid of this. Now look, if you draw the volume profile of this consolidation here, so this is the big up wave, right? Or up bar, I mean. If I just go until they broke down, you can see that we're right at the VPOC of that. See that? That's the volume point of control, that red line, right? And this blue line is the volume area high of that zone. So if I wanted to, I would say this blue line here, what is that? 11,288. That probably holds if this is not going to take the high. So if you think that you're pulling back more, which I think we are, then most likely if we get up here, they reject it there. It also means, though, that I don't want to be a seller until I see that happen. Because if they don't reject it, this high is going to be very easy to take. So 11, like, yeah, that general area is pretty important. We'll say like 11,288. Here, let me just move this to here. See what that measurement is. Is that still lined up? Yeah. Okay. And then let's switch this to real fibs and not midpoints. Oh, here we come to it right here. Yeah. So we did a 23.6% retracement, and then we're trying to rip through this consolidation zone. So on the algo, what we're seeing is just straight up. Pretty untradeable, right? Like this, there's nothing for me to do here unless I bought this one. Or unless I held my initial buy here. So I would have had to buy this pullback, which isn't wrong. It's just, it's a little bit risky, but it's not. Oh, actually, did I miss it? You know what? There might have been a DVP. Hold on. Are these VPOCs together? Yeah. So once we got over this on this tiny little time frame with a buy, oh, we didn't. Yes, we did. The star has a VPOC above it. So this put volume up above that line, making a pullback buyable. Darn. I was looking at it at the higher time frame and it didn't even occur to me to check the 15 tick for that same setup. That's too bad. I just missed it. I was rambling about something and didn't even think to compare that. I was looking for it on this time frame that I usually trade. I hadn't thought about the fact that it might only set up on this one, but it definitely did. Which means it probably won't set up here. So we probably are going to the high. We'll see. But that's a good setup, by the way. If you know how to, if you can measure the volume point of control of those Weiss waves, and you can identify what an aggressive signal looks like any of these to the upside, and it happens after getting volume up here and pulling back, and they basically hold this more or less, that move is usually pretty good. And I've actually seen a lot of lows of the day set up like that. And it works on the short side too. Since there's nothing to do for like 2 minutes, I'm going to run to the restroom. I'll be right back. We'll see if we can't catch a pullback. If they don't pull back, it's fine. Like, we'll just chat or whatever. I'll just talk to myself. If you guys have questions, feel free to put them in the chat. Or if you want to see something else, if you want to see ES, whatever. Or, I don't know, whatever you want. It looks to me like we're just going to rip, and I'm not going to chase. So if we don't get a pullback, I just missed the move. But I made 440 earlier on the short, so I'm good. Or no, it was a long, that's right. Could have been a lot more, though, and it just goes to show sometimes holding runners, even though you don't think it's a good idea, it works out. Okay, be right back. All right, I'm back. Fresh water and try my best to stay focused. Like I said, glad I'm up on the day, or on the session, I should say. I'm glad I'm not making any stupid mistakes. Missing trades happens all the time, and that wasn't even a trade that set up on my time frame. So, but it is high cat. But it is good to see that it works on both. Speaking of, let's take a quick look at what the higher time frame is developing as, because I think that is something I don't do enough of live, but when I'm just sitting here with nothing to do but watch the market, I will keep an eye on it. And then whenever I do my reviews, I always look at it. So there's two ways to do this. The first thing I like to do is hide all of the... yeah, I know. Come here. Hide all studies. Okay, so if I just look at the Renko bars, I can get an idea for the rotations and start to identify what levels are most important. Now I've got all the drawings from the other charts hidden for the moment, but I'm going to show you how we can add them and it'll make sense where things are. But the dash lines are the voodoo range levels, and then these were stuff we were talking about just now. So I'm just going to get rid of those for now. So we've got, since remember this is a higher time frame, so since this morning, or since Tuesday morning, 8:30. So we had the morning started here. It opened, right? You can see we came back to that area, couldn't break it. They pushed and made a new high just after the 30-minute opening range was closed. They pushed through the high, and then they pushed through the low. And so right there, when they do that, when they grab the high and they push all the way down and go through the low, you should, it's not necessarily bearish, right? But you should assume that we're not trending in one way or the other. And this whole, in my opinion, the whole middle range, that A period, so from 8:30 to 9 o'clock, right? This range here, you can just like ignore it all. Like just don't even, if you want to do the best you can, just don't even mess with it, right? And if you can get setups up here above that high or down here below that low, preferably trading back towards the middle, as soon as you see that move, it looks just like this almost always, except sometimes it's the other way. It's not bearish, it's neutral, especially if you have this low down here and a high up here. See that, how it's actually just trying to, so the market got contracted, it tried to make a move and it got rejected, but since it had already established and auctioned this area pretty thoroughly, it doesn't need to necessarily stop there on the way to the liquidity that it really wants, which is down here, especially when volume is high because it's early in the day. And so they try to get here and they can't. That move can reject all the way back up again. Usually it takes a break at a high volume area, but it can eventually go all the way up. So otherwise you might need to trap shorts by going just a little bit lower and then buying, but then you always want to watch this pre-market low, because once that starts getting taken out, or if you have the previous day's high, or at least a swing high, but like this one, if those get taken out, you could then turn into an afternoon trend day, right? So look what happens here. We have here, let me extend this and I'll just extend drawing. So that is kind of our no trade zone. Not saying you can't trade there, but your trades there are not going to be as good, as consistent as the ones that develop outside. And you can see this without the studies. So look, we come towards this liquidity. We come in and they try to go early and then see how they bounce off of it. If you're gonna take a breakout trade, do it here, right? But look how close you are to resistance. I mean, where are you gonna put your stop? Here? Like maybe you get 1-to-1, right? Most of the time. See how it takes the liquidity? It gets just a little bit above it. Where is it headed? probably back to the midpoint here. That just means that the price is moving. So see how we come back in there? Right in the middle of this. It's the center, look. See that? It's the middle of this. And it lines up perfectly with that, right? So now it's going to start looking like it's trending. Oh, that's where we are right now. So if you think about it this way, we had the opportunity. If it needed, like I said earlier, I stick with what I said earlier with the candlestick chart. If we needed more energy, what you would expect is that this low gets taken out. But how we do that is never a straight line. Whether or not we come all the way up here and rip over the high like it looks like we're doing, and then rolling over, or if we, like drop right away, you don't really know how it's going to happen. But one way or another, we know that if it exhausts, this is where it's headed, right? And that as long as these 11,200 area, or at least 11,170 area holds on a pullback, you can still be bullish on a higher time frame. Could it just rip and roar higher? Yeah, that can happen, right? And remember, we have this acting as a magnet, right? So if it gets over 11,314.75, it'll get into the volume area of this distribution here, and the likelihood that we get to that VPOC at 11,358.50 is high. And that's a 40-point trade if you get that right? Chances are you'll probably get to 11,380 most of the time, because this area should be pretty easy to trade through if we get through it. Just like this area was relatively easy to trade through once we got to it. So I don't think we're headed there yet, but we might be, right? So keeping all that in mind, that just because we're going up doesn't mean that we're always going to be going up, and it doesn't mean we completely missed the move, and that I could have made, so much money rather than just like giving up on like 9 points average. I could be perseverating on the missed opportunity, but instead I should be looking at this and saying, where's the next opportunity most likely to be? And so if you don't see it yet, what you can do is you can put back the drawings, and I'll take out this drawing, since that was just conceptual, right? We'll take these out. The conceptual drawings take out. And so now we can see the levels based off of the footprint, right? So remember, blue is previous day's point of control. You can see that was developed in here. And we never, so far, have not made it back to there. That's going to be the bear target if we get a turnaround here. And then we went through Friday's point of control. We negotiated it. Buyers won. They ran into a low volume node that's been resistance before. They swung over the high to collect liquidity and went back to Friday's point of control. We bounced at Friday's point of control, which is also the midpoint of this pullback, right? So that whole area re-auctioned this. Most likely we can take this off the chart now, because we've not only rejected from the downside and returned and reclaimed it, then gotten over it and rejected from the upside. That's usually a sign, once you've done both of those in either direction, or in both directions, that's usually a sign that level is fully repaired, and there's really nothing, there's no reason to really keep it on your chart. But you can see in the past it was an important level to have there, and it did have a lot of volume. So if anything, if we end up getting like a chop reaction there, I wouldn't be surprised, but I wouldn't necessarily be looking for this kind of touch and go out of it, right? So if that is distracting, you can delete it. But you can see we have not done that for Tuesday's point of control. In fact, we haven't even come back and tested it. So we usually do. If not, go under it and test it from below, right? So now let's look above us and see what we have above us from this point of view with all the levels. You can see here we have an anomaly waiting for us up here, sitting underneath this distribution here. And then above this, we have a low volume node that at 11,392, we also have a Voodoo range level right there, right? So most likely, we are headed here. Most likely. I still think that's the case. I just kind of doubt that we go there in a straight line, right? So I think most likely we come up to maybe this anomaly, or we come all the way down to here somehow, maybe by bouncing around, making one more trip here, taking it down, and then we probably overshoot this and bounce in here somewhere. I just don't know exactly where. Maybe 11,170, and then take this back, rip through this very easily with high volume, maybe during the early catch session or the close. And then the question is can we get through this anomaly? Because if we can, and we can beat 11,336 or so, we should be able to take this high, right? So it could take 2 days to recover that, or it could take 2 hours if we don't need the refuel. But if I had to guess, without any studies at all, I would say we probably need the refuel. So now let's add the studies. So now we're going to unhide all the studies, and we're going to see what we could have seen to identify the aggression based on this higher time frame, or the lack of aggression. So on the pullback, well, on the open, we had the open here. They trapped some sellers at the down here at the higher low. See that? And we had high volume here. These are often retraced, so I wouldn't be shocked if 11,120 would have been tested. But yeah, we were able to make this lift work, and then this is the open right here. We ripped higher. Look, this is a squeeze, right? Pink bar, white bar, white bar, white bar, pink bar. That's just like we just saw. Big old squeeze. Look how those reject. They come into a level. They usually reject with a sign of aggression, and then the next attempt to save the trend is immediately beat, leading to an extension, right? That extension comes to retrace at least some of this, sometimes all of it. Notice in this case, the sell wave was bigger than the buy wave, but we did not take the low. Isn't that interesting? So since it was a bullish trend, and we couldn't take the low, but they put in a ton of volume in here, as long as this low holds, we're bullish. And then we don't need to refuel, because they're going to trap. They basically did it for the sellers did the buyers a favor by getting super bearish in here. They have a lot of volume down here. See how it spikes up and then like continuously goes higher? So all of this, they had a bunch of volume come in there. And so remember, the pink is a high volume bar to the upside, and that one was higher than this low, right? So those don't always hold, and usually when they do hold, they usually come back and retrace them. And so I might not have immediately bought this, especially after seeing this one fail. But when they try to pull back and they come back with a star on a higher low, that's pretty strong, right? And this is that low volume node. So on the footprint. So if you miss this star after the big dominant wave that got rejected, if you missed that bounce here, what you would have seen, or maybe if you took it but you got out of it right away, like I usually do. On this time frame, what you see is what we call a speed trap. So that bar, even though it was purple, it formed very quickly, and because of that. And because of the fact that, see how this spike is so much bigger than this spike, right? This bar, this big spike here. So there's a lot of volume here. And since this bar closed below this point of control, that's going to create a pullback to support. Now, I thought support, personally, was going to be down here. I expected this to be a much bigger push. But what they ended up doing is making another higher low, and then putting another high volume bar in, this time with an X. So once you get this X, and this goes for the other direction too, what I'm finding is the high volume diamonds, they work better underneath them, but closing back inside or trapping back in, and they work less well as a higher low now. But all throughout here, we only had a red X and no blue X. And so once you've gotten this blue X, you need to see continuing buying. Otherwise, they're not going to be able to save it with a big volume bar, unless it's also got an X on it. So, okay, so they get the continuous buying, they make a new high, right? And then they have an X with a star and a diamond to the other side. So this one was above this one, right? So it's pretty powerful, because the market went higher but they aggressively defended this. And why? Because it's another high volume node, and that's where sellers wait. So then we get this high volume up bar, but remember what I said, once you've gotten this blue X, you really want them down here. So this one ends up failing, and that's normal. And that ends up failing, and then the diamond that comes after the X works very well, right? Just like if we would have had a white diamond here, that or after a little pullback, that when they line up well, that is a good setup. Okay, and then we finally get the pullback that I expected to test this high volume, right? And they put a star in, which is really not enough because they didn't actually get underneath it. So they're trying to trap back into this one, but they're not testing behind this yet. So this one probably fails, and it does. Now we've gotten behind the big volume bar, and so the next stop would be this high volume bar. And we come right to it, put in another X, this time with a momentum arrow, and they tried to turn the market. Now, the good news is for the buyers, we know that even if they go a little lower than this, as long as they protect this 11,120, it's probably an okay place to buy. Plus, look at all this volume that came in on this higher time frame, and it all came in at the end. See how there's a big these bars suddenly get really big, and that started happening right here when after the sign of aggression. So what that basically means is on this higher time frame, if we can develop volume above this, that bar that low, whatever low they put in here, is probably safe. So the most conservative way to trade this, if you're looking for the reversal, is to wait until they put volume up above that and then buy a pullback. So they get X immediately followed by a triangle with a pink bar. That's sometimes a squeeze, and they do squeeze right through it. So now we know it's bullish, right? And on this time frame, we would want some sort of a pullback. And if you want to know where that pullback is, the easiest way is to find out where all the volume is on the down wave. And it's way down here. So this would be the most likely place for a pullback. You can also see the little dotted line. That's usually lined up with that. So let's see if we can pull back into 11,150. I don't remember if we do. I don't think we did. Oh. Okay, we put in a higher low with a high volume. I'm kind of surprised that worked. I would expect that low to get taken. Let's see if it does. Yep. There. That's what. So once this low, again, because we had a blue X, the higher lows with high volume are not safe. They want the market wants to come back and re-auction this. They don't like this sitting here without being tested. And so these big high volume bars are basic in this scenario. Once you've gotten this blue X, this big high volume is like, there's no reason for them to need all that volume. And yet they do. And look where they get. They get nowhere. And then they get to the point of control basically and they reject. Right? So getting under this makes a lot of sense. Look, this one has a diamond on it too. Now the interesting thing is if you put a pink volume diamond on and then you get under it and you trap back in with another diamond, this often does lift. So they may be able to hold this low that way, at least for the time being. And they do. Note the other trade that we talked about where you wait for this volume to develop and then you wait for the pullback to come in. Even if you took this one, you'd have to take this one too. If you put your stop so close that it got stopped out, you'd have to take this one too. And in fact, you could even take this. Once you see this trap work, the green bars now are going to start working, as are other up like stars and stuff like that. So now this looks like a trend, basically, right? Because you have the X left behind, and you got a higher low with the diamond. That only works in a trend. So you don't take any short signals, and you can add to your longs on these. And so now this will work, I bet. Even though it's a higher low, it's trending. Yeah. So see how every sell signal gets immediately destroyed? As long as that continues, you can buy dips. Eventually you're going to be wrong. Now, they did give an X here, right? So we want to be on the lookout for lower highs because they're probably going to get wrecked. And then they put in a red here. Do they get a lower high with a volume bar? Nope. Nothing. Just so this is your buy again. Purple bar, green bar. Purple bar, green bar, right? This one was triangle down, green bar. All of those are good setups as long as you're trading in the right direction. So all of that works. Then at the very high, you get purple bar, green bar. If that would have been at support, that's a really good buy. This is not support. They're trying to use that as a breakout, and that doesn't make a lot of sense. It also has a ton of volume. Once they get under that volume, it's trouble. They actually have a divergent bar here on this time frame, which means there's more buyers and sellers in the wick, yet they close low, right? So we're going to have to retake that before you really think it's bullish. You get the volume bar up, the volume shift up with the momentum shift up and a high volume bar. It's risky, but it works. And they push it. So this big trend was still intact. It was a higher low. And they ripped it through here, defending this, right? So now if we get a pullback into 11,280, we should just assume that it's going to continue to work as long as we don't have divergent volume. So look, every time we made a new high, we got bigger volume than the previous one up to here, right? But then this current wave from here, let me delete the arrow. This current wave that I said kind of looked a little sketchy, this volume is lower currently than the last time we had an up wave. If this is the high, that is divergent. And so then what we want to do is we'd want to now go to a smaller time frame and say, did they put in some volume on a smaller time frame to the upside? Because if they did, those guys could get trapped. So let's check. On the 24 tick, do they have a ton of volume at the high? Yes. Yes, they do. Right? It's all right here. See that? And it's way bigger than these waves. Right? This printed bar here is way bigger. So what does that mean? It means that there's a potential short setting up. See all that? Look at this. Massive, massive buying into the high. And then suddenly they're trying to take this. So you can do it aggressively with the 15 tick and just like short something, like just wait for the aggressive hit and then just take it. So we'll take 3 that way. I'll just show you. I'll demonstrate it because I'm in the green. It might not work if you do it this way, right? You're aggressively taking the first sign of selling and you're following them in on a very small time frame after all of this buying, right? So it's the most aggressive you can be. But you can get paid really well if it works, right? Instead, to be more conservative, you can wait for this to break and put volume below it. If you want to be even more conservative, you figure out where the mass of volume is, the point of control, and it's right at the high, and so you have to wait until you get volume developed underneath this. So we would wait for a bear bar to form when the yellow line was below this dotted line. And then we would be pretty confident that the high is safe to put our stop up above it. I'm willing to take the 10-point stop here to see if I can get 10 points and then hold runners, because this is exactly the kind of scenario where you do hold runners, and I will. But if I can get 10 points here with a 10-point stop and I can get runners like that, when it's this setup, I will do it. But my stop can go right at above, like a couple ticks above high day, basically. And it, like I said, it's not going to work 70% of the time. In fact, I'd say about 50% of the time that it does work. The times it does eventually work, it first takes this high. But 50% of the time, it doesn't. And probably like 20% of the time, it just drops and never sets up on the other time frame. So your choices are accept that you might miss it and wait for it to set up on the higher time frame so you can get a better win rate, which is totally fine and what most people do. And then there's what me and Simon do and some of the other aggressive traders, which is accept that, you pick your spots very carefully and you have certain situations that you're able to get a little bit more aggressive with your size as long as your risk can be low. And so in this case, by risking only 10 points using the 15 tick, I can take a full-size trade and not lose an R when I'm wrong, and then be able to follow, even if this doesn't work, I can follow up with a second trade, and even if that doesn't work, I won't be down even 2R. And then that usually means throughout the rest of the session, I'll probably be able to make it back. Or if nothing else, it won't be devastating. Even if I can't make it back, it's not like I'm taking some aggressive trade that gives me like a devastating loss when it doesn't work. But fighting the trend is not something that's going to work 70% of the time. So just to take the aggressive trade, you have to accept that the majority of the time, or at least half the time, you're probably going to be wrong, right? So you have to be ready. Like, you have to part with that risk right away. Like, when I push that button, I know those 10 points, like those $600, like, might be, I've paid it already. It's already spent. It's not mine anymore. I'm willing to just give it up for the chance to bank those 10 points and have a massive runner for the risk of 10 points. Because if I can get one contract to run like 50 points on a 10-point risk, whew, like, that's powerful stuff. I don't know if I will, but when it sets up like this, especially when it bounces right off that point of control or right off that volume area low of this distribution here, this volume distribution, the chances that it actually dumps are significantly higher as long as we can stay out of that range. So I would rather be a seller here than a seller here at 11,330. I want to see them reject that immediately. If they start pushing through here, and they close bars above that, it's probably not a short. So I only need to try this once. And when those kind of scenarios come up, especially when the potential for a payout is really big, I'm willing to be a little more aggressive and trade the 15 tick. But recognize that chances are it will fail, because they often do. But this is exactly the scenarios where I'm willing to take the risk. So I hope it works, but at the same time, I would take it again if it sets up tomorrow in the exact same way. I wouldn't change it. I know it's the right move. The only question is, how big can you take it? But the right move, in my opinion, is to take the aggressive trade here. Because missing the opportunity when you have such small risk, so the win rate might not be great, but the risk on that the trade, if the trade doesn't work, the risk itself is such a small portion of what I can potentially make that not taking it seems like a mistake to me. But people have to consider, how they're psychologically going to handle taking a loss when they kind of had a pretty good idea it wasn't going to work. And some people have a really hard time with that. And honestly, sometimes I do too. So if it works, it works. I will take some profit at 10 points if they give it to me, because of the fact that the win rate isn't great. But other than that, I'm going to try to trail that stop if they decide to reject here. But even if I just get the 10, my risk is just minuscule, because it's 10 on, it'll be 10 on only 2 contracts, and I'll have made 10 on 1 contract. So I don't want to count my chickens and all that, but those are the decisions that you need to make before you sit down to trade. I already know that this is one of those scenarios where I'm willing to push it. And so I will take it 10, and then I will take another batch at like 20. And then the rest of the contracts are staying on pretty much to like the low. Do I think we're going to go make a new loan? Like I said, I think we could. I don't necessarily think we're going to go straight there, but it makes sense to me. I've explained myself at least once. But if we struggle here, the next stop is to go rip those lows up and find support down there. Like, see where buyers show up. I think a liquidation makes a ton of sense here. But realize that most of the time it does not happen. Most of the time what you get is this time frame works out. So you get to like 97 and then it bounces. That's what usually happens, because you're trading the 15 tick, and the 15 tick setup says it'll probably go 8 to 10 points. And I could have taken 8 and I didn't. I don't think I had 8. I think I had 6. Let me see. Yeah. 6. I'm not gonna take 6. You're gonna need to give me at least 10. I want to get 1-to-1 on that one contract. And again, even though I won't be break even or anything, like it, the fact that one of these contracts could literally go 100 points, like being able to get paid 10 to do that is great. So I'm basically like paying my I'm paying my nervous mind that would risk wrecking this trade, messing it up. I'm paying it like $200 to chill out. That's why I take the 10 points. To like satisfy that part of me that wants to pay the trader, you know? Is it like the optimal plot spot to take profits? Probably not. But if I don't do it and it rolls back on me and I give up what is in essence 30 points because it's on 3 contracts, and I had a chance to decrease that risk to 20 points and take 10 points of profit, and I didn't take it, the result is usually like self-destruction of some kind. Let's just peek at ES real quick, just see what that looks like out of curiosity. So ES on the 6 tick got a big wave up here, but it's gotta come all the way down to this to really prove that it's reversing. It's got a ways to go on the 6 tick. It had a blue X down here, and then it pulled back and made a higher low with another blue X with the diamond. See that? So this diamond with an X, and then higher low diamond with an X. This is usually retraced, but not always right away. But if I had to guess where it's going, probably right there. 39.33, give or take. Let's see if we trapped anybody on the PNF chart. Uh-oh. We got a big seller that we're going to trap this guy. So we've got this buyer, but then this seller. So on ES, this is where the biggest buyer is. See that 282? The next biggest buyer is all the way down here. So if we can't get under this, it's going to rip, and I'll lose. Note how this point of control of that upwave acts as some resistance. That's a good sign for me. Putting in a bull bar above that is obviously a problem. Or if it's not obvious, maybe it should be. We don't want volume to drop and then bounce. Okay. We don't want volume, this yellow line, to drop here and then rip back higher. We want them to reject right here. So yeah, that if you look closely, that little dash, which is the VPOC of the bar, it's below the dotted line, and that's very important. That's all I'll say. That needs to happen. If they close it bullish, that needs to stay still. If they close it bearish, you can go wherever you want. But if the price follows it higher, that volume needs to stay stuck under this VPOC. So that, because this VPOC is like based on every little bar, right? So it's a really, really tiny fractal of a time frame. Whereas this VPOC, as well as the dotted one, is more based on the rotation. So a bigger, slightly bigger time frame. So the tiny little time frame VPOC needs to get stuck under the higher time frame VPOC unless they close bearish. Then they can sneak it up there but dump it. So like it could have gotten up on this one. It could have been up here on this one, but then if it would have closed bullish here, it would have to drop. And to be honest, if you're going to skip one of these, skipping the orange bars or the volume shifts down where the VPOC is not in the wick, sometimes this is exactly what happens is you get price up here and then it shifts volume down, but you're so far from the wave VPOC, because the wave VPOC's like right at the top, that you end up just slipping higher, and the VPOC getting above the VPOC of the bullish bar getting above this line creates a squeeze. So if you're gonna skip one, see, this looks better on the smaller time frame. It looks better where you've got the VPOC in the wick of the, but that bar is a star, not an orange bar. But when you have an orange bar, you can get orange bars with the VPOC deep in the body of the brick. It doesn't mean it's not going to work. It's not like a deal breaker. But if you spread out all the times that worked and you compared them to the times that didn't, most of the time the orange bars that work have the VPOC up here. I couldn't tell you how many times this works still. Sometimes it does. But many of the times that it fails, it sets up exactly like this. The good news is if this closes bearish, it can drop much faster because it's already pushed volume below the VPOC. So it doesn't mean it's gonna not work. It's just a different. The drop is more. You're looking for a severe drop, not like a hang, and like where they call it like leaving them hanging, right? If they hang 11,300 here, they would usually have to get the VPOC up here, and they get everybody in there and then they hang it. Whereas here you're like pressing down under it to protect it, and so if they do get follow through to the downside, it'll be like cascade down, and you'll hear my order canceled like right away, because it's a bracket order. So what's canceling in that case is the stop order, the stop loss, and because the fill is on the limit. So but you can see on the candle chart, it looks like a bull flag, right? And it could be, like, I'm not, it would make sense. A little further and we'll get paid. I got 4 more points to get 10. Note here, the smaller time frame confirms a win, quote unquote, when it gets 2 bars lower. So 30 ticks, right? But that's only, what is that? 5 points, right? Wait, no. 6 points? Almost 6 points. Or no, it's almost 8 points. I mean, every point is 4 ticks. So or yeah. So that would if it gets here, it's gotten my 8 points, and that's considered a win on this time frame because it's gone 2 bars with the risk of 1 bar, and 2 bars in one direction is about equal to 1 bar of a reversal. So the length of this wick and this bar is about the size of 2 bars extended beyond that, because you can see when it has a wick, that wick goes in, it shares, it overlaps, it shares range. See that? The wick overlaps with the body, so it's got to go through the wick, and that's 1 bar, and then it's got to put another bar in it. We want this drop to happen quickly. It's not a good sign when it sits here forever. We want to see some urgency to get out of a trade. We want to see all these people who bought up here to be like, oh shoot, there's no support. I don't want to be stuck getting a huge. I don't want to like hit my trailing drawdown. I'm going to just get out of this trade here. We want to see them anxiously exiting, like I was earlier, when we saw this basically exact same thing without the volume. But remember, back then, it did not reverse, right? It continued higher. And here we did get a down bar, but it was purple. So far, I would say that this trade does not look like it's working. Most of the time, it's already done. The 10 points, when it's going to work, it's relatively quick. And my coach says, if you want to put like a 2-minute rule or a 5-minute rule or whatever, where it says that like, if you're not profitable in X amount of time and you want to exit the trade and wait for a better entry, or just exit the trade and reanalyze, that's totally fine. But have it in your trade plan. Don't do it randomly. Like have a plan where it's like, I'm going to give the trade this much time, and then if it doesn't progress further beyond like I'll wait 2 minutes, let's say, and then if within the next minute it does not progress further, I can exit the trade. That's the kind of rule you would build. It's not a rule I currently have, but it would be an acceptable part of your process, of your trade planning process, but you have to plan it. It can't just be, I don't think this one's going to work, so I'm going to exit. Like, it doesn't have to be ultra specific, but it has to be specific enough that you can be objective about the decision and know that every time that same situation comes up, that you could confidently make that same call and do it consistently. So if it's specific enough to do that, then it's good enough. But if you're leaving it to like feel, or you're leaving it to like you're way better off like defining that, right? Whatever, like analyze it, journal about it. Like, what is it that you see that gets you to feel like it's not working? Like, how could you objectify that, and then look back over 100 trades and see if you exited every one of those when that specific thing happened, how many moves did you miss, and how many times were you right to exit, and then compare that to your win rate if you took every single one of them. And if it's better to exit when those conditions exist, then freaking do it, right? But the problem is it means you have to live with the times where your system got you in the trade, your system told you to exit the trade, and then trade hits target. And both Simon and I are of the mind that the psychological effects on the rest and the resulting effects on the rest of your trading day are probably more severe than any like real savings if you did everything perfect. And the chances that giving yourself that flexibility might end up making you trade off process or do things that are not part of your trading plan, which we call trading off process, right? Not following your process. That the more complex your system gets, the more likely you are to trade off process, and the easier it's going to be to tilt. Now, you may be able to catch your tilt and stop trading if you have some discipline and self-awareness. So just because you go on tilt doesn't mean you have to blow up. But the likelihood that you get that frustration or that like those emotions end up seeping into your decision making increase significantly for every decision point that you have. Because our brains just get tired and we get emotional when we have a lot of decisions to make and we see the results of those decisions, and yet we know that probabilistically those results are not normal. It's very difficult to stay calm when you have so many decisions to make and so many points that can go against you. Like, you got into the trade, that turned out to be a good result. We decided to stay with the trade, that ended up to be a negative result. We decided to get back into the trade, that ended up being a negative result. All those things might be totally fine based on all your back testing, and if you keep doing it, you'll probably make money. But how many times in a row do you have to make those quote unquote right decisions but get a poor result? How many times does it take before you start getting frustrated enough where you all of a sudden like aren't in a good state of mind to keep making good decisions? For most of us, it's probably 3 or 4 of those unlikely unlikely results, right? And the problem is if every one of your trades or most of your trades, you have 3 decisions to make. Should I get in? Should I stay in? Should I take profit, right? If those are all variable and not static, you could hit that 4 error or 4 negative result threshold within like a trade or 2. So if you're finding yourself getting really upset over like taking 2 stops in a row, yet you're not risking very much of your capital and you know that your trades have a high win rate, but yet it still bugs you, one of the reasons might be you may have too many decisions to make from the point you get into the trade to the point you get out of the trade. And the fact that you had to make so many decisions and the results didn't work out to your favor will leave you feeling emotionally like spent. We almost hit the target. It dropped and filled this 8 point, but it did not get my 10 point target. I have a 10 point target, and we didn't hit it. We got 8, but I didn't take it. So again, a good example of something where if you have the variability in there, that choice to leave the 8 points and hoping for 2 more can like scar you or leave a little bit of a scab to pick. So I try my best to keep those things systematic as best as possible because it protects me mentally. For me, there is no choice. It's just, did it get 10 points or did it not? Like, there are conditions where I can move those, but the norm is that I don't. The conditions usually are that I remove the 10 point exit and try to hold for longer. I don't have conditions where it says if I can get 6 or I can get 7, and it looks like it's gonna reverse on the DOM that I can exit. I don't play those games anymore. That first 10 points is either filled or not. Like, I'll do it with my runners, but I won't do it with the first target. The first target has nothing to do with how far I think it's going to go. It's only there to satisfy that sense that I should get paid when I'm right. It's not optimal, but it's what keeps me in the game mentally. So the last thing I need to do is make that cost even more. If I know that it's optimal not to take the 10 points and instead just to hold the whole thing, it can't be optimal to take 8 points sometimes. That can't be better if it's actually best to not take any. I mean, I guess it could, but it probably isn't. And as I've said before, the hardest part about trading extended hours is the time it takes for moves to frickin' work. Or not. It makes it very hard to trade size. Because you end up having to sit with risk on for a lot longer than you're used to. Knowing that really at any moment it could just rip to your stop. Or your target. But the longer you're in the trade, the more risk you have of losing. I mean, the risk amount is the same, but yeah, like the risk of some sort of like unusual event influencing your trade increases. But I'll tell you, like, internally, if I had the right to exit this trade at break even at this point, I'd probably ditch it. But remember, I'm not a very good intuitive trader. If it wasn't for this system, I would make all sorts of mistakes all day long. Like, my natural reaction is to do everything that is suboptimal. In general, I would do better trading against those instincts than with them. That's not the case for everybody, but for me it is. Because usually those decisions are based on avoiding pain. And that's the last thing you want to use to make decisions when you're trading the markets. I see that big rip was apparently Putin saying that he's still open to talks about peace in Ukraine. So that was just some like algo based squeeze on news, making it even more likely that it gets retraced. To be honest, but not necessarily right away. And I don't necessarily use that information to make decisions, but it in the aftermath it does explain things rather well. When you look back and you say, "Oh, I see, it just ripped here because of that," so now that makes sense why this next thing happened. Then news is probably, if you're trying to have an excuse for something, then news is probably pretty important. But if you're trying to estimate what's going to happen next, yeah, keeping up with that stuff probably doesn't help that much. Here they come. Maybe my instinct was right this time. My stop is right above high day, so if they take it, they take it. And it looks like they will. There's a big buyer here. Aggressive buyer with volume shifting up. Not what I want to see if I'm short. But notice all this all this buying is basically just the conservative entry where you wait for that to get taken out is probably still valid. But the likelihood that they're able to push over that high becomes pretty good. Back to that VPOC again, the dotted line. See how now they're trying to use it as support. So now look where the VPOC of the bar is. It's above the dotted line for the first time, and price is trying to reject. If they close this bullish, and I didn't have my stop there, I'd want to be out anyway, because then it would be bullish, not bearish at all. But my stop is up there at 10 points anyway, so. So this star at the low on the 15 tick suggests that some sellers got really aggressive at the lows. They're probably stuck. They're probably trapped. And right when I saw that, followed by that pink bar with the diamond and the X on there, I pretty much knew that this was going to get at least stopped, if not totally wrecked, right? So if you want to, if you have it, you can put it in your plan that once you see, people on your side getting trapped, that you can just exit the trade. But realize that when you do that, you are giving up a few times when they actually they get released. They get trapped and then they immediately come back and release them. Sometimes they rip.
Order canceled.
All right, they got me, and that's fine. That's what happens when you trade the faster time frame. So now they've traded into that volume area, right, through that blue line. And so if they close this candle here in 20 minutes, I don't want to be shorting anymore. So they basically have 20 minutes to try to reject this. It could just literally roll over, which would suck. But at this point, I can't take the aggressive trade again. I need to wait for them to get it under them, which is a little bit irritating because it means that I would have already hit one of my targets on the aggressive trade, but this is just the way it goes, especially trying to fight the trend. The chances that the first try doesn't work is actually 50%. So just goes to show it's another reason why trading in both directions ends up messing with your win rate significantly, because it's really hard to keep a 65% win rate if you're going to start shorting the highs. Can you make good money doing it? Yeah, but you might lose a lot of money first. So I do currently expect this to still roll over eventually, but I don't know when. So instead of trying to guess maybe this will be the high. Oh, notice we still have the same conditions. Oh, we don't. Nope, we don't. So we put in a 3-wave down wave, and now we have a divergent wave on the very small time frame, but a really big wave on the higher time frame. So for these two time frames, they are not the way we want them. On these two time frames, we would want to buy dips, not sell rips. But what we saw before was on the 30 tick that it was divergent. But now that I think about it, you would need this divergence to confirm this divergence. You need a down bar here, and so to get the divergence confirmed, we need to get to 11,302.50. I forgot that. You need to top that out. So they need to close this bar 11,302.50 on the 30 tick to even have a chance to finish that higher time frame wave divergent. And we didn't wait for that. I went right to the 15 tick. And had I seen the VPOC shift into the bar here, I probably would have skipped it. So. But again, this is a good example of where after taking a trade that I said I was totally comfortable with risking, the results not working out makes me go back and reanalyze where did I make a mistake. Whereas the truth is, there might not have been a mistake at all. It's just that I chose to take an aggressive trade, which I knew would only work 50% of the time, and the coin flip just didn't work in my favor this time, right? Like I was risking 10 to make 50, and you don't have to be right more than 50% for that to work, but you have to accept that 50% of the time you're going to be wrong. So if you're going to take those shots, realize that you're not actually doing anything wrong when they don't work. The only thing that would be wrong is to stop taking them if they really are that asymmetrical. Then the only mistake is to stop taking them. So, but if I really wanted to nitpick and say, oh, I should have seen that wasn't going to work, it would have been when we looked at the higher time frame. Well, it looks like a divergent wave right now. This wave is technically not finished until we get down bars, and there's not been a down bar here. So it's only divergent if they leave the area. In other words, I can't jump to the 15 tick and anticipate that it might do it and then be surprised that it doesn't. So, not wrong, just very aggressive, and therefore there's going to be a lot of noise. It looked pretty bearish here, and on this small time frame, remember, it hit its target, right? It got 8 points. I just wanted more than that. So, if I was going to trade on this time frame, I've got to accept that the higher probability of trade is to exit at 8 points. So instead, if I'm not willing to take profits at 8 points, the smarter thing might be to wait for the higher time frame to actually confirm, not just have an opportunity to possibly be bearish. But it just goes to show that, like, you can have location, you can have everything right, because the location was good, I think. They just needed to do one more squeeze, or maybe two, right? I don't know if it's now or if it's the third time, right? You don't know how many times it's going to take. But if you want to be conservative and that kind of stuff bugs you, taking shots like for a 5-to-1 gain bothers you, then just wait for the confirmation instead. You won't get as big of a trade, right? You probably won't get 5-to-1 risk reward, but you'll get 1-to-1 way more often. It just becomes a style question of, like, what can you handle psychologically? Like, is it worse to take the trade, get stopped out, and then see it go 50 points without you? It's like, is that more damaging? Well, then don't take the aggressive trade. Because that is pretty frustrating, but I'll just keep doing the way I do it, because I know that when it does work, it pays well. And I still have a way to get in. I just have to now wait for that confirmation. So I can still take the slower trade. I just know it sometimes doesn't set up. So let's see. Do we get pink bar star here? That would be bearish. But with the star here, I want to get under it first, and then I'm just gonna have to wait for that retrace. And if they don't give it to me, they don't give it to me. But here's a good example of how much bigger this time frame is to this. Look, this move, same move. This has already gone 3, and it'll go 3.5 bars before this bar even closes. So just goes to show that like these are multiples, right? Almost. It's practically exponential. So the next most aggressive would be to take this. I'm not going to do it, but that would be, if I hadn't taken the 15 tick, that would be the other way to be more aggressive, is to wait for the 24 tick to signal an aggressive short opportunity. Again, not wrong, just stylistically, it's the question of, are you willing to take an aggressive trade and put your stop at the high day? Because remember, my stop on this small time frame is 10 points. This stop, you'd have to put your stop at like 25, and your entry, if you took it right away, is 06. So it's a big stop when you're wrong, and it's still aggressive, right? It's not gonna always go more than 10 points. It'll usually go 10, but it's not always gonna go and take this back. Even though I do think that's where we're headed, it doesn't have to do it in a straight line. It can go 10 and then go up 30 and then go down 30. So in general, you have to decide, like, how many times am I going to take the aggressive trade? How much risk am I willing to take on it? Now, the other way to do this, if the only problem with it is the risk, then that's okay. You just wait for it to signal, which happened here. And if you want to say, let's say you want to take a 10-point risk, well, take the stop, add or subtract 10 points, put a limit order there, and if you get filled, you get filled, and if you don't, you miss the trade. I know 2 people in my trading room that trade that way, and they love doing it, and it's fine. As long as you wait for the signal first and accept that sometimes you're just going to miss the move. It doesn't work very well when it gets really fast. When it gets really fast, it starts to become where, like, if it fills you, it's more likely to fail, and when it's going to work, it's just going to rip. So you got to be careful if you're trading in a really fast environment, like a really volatile fast environment. Those pullbacks, just those entries just don't work out. They do, actually. You just need to do it on a higher time frame. They do work out. It's just it's always fractal. So if you're trying to do that and it's not working, like you're not getting pullbacks enough to fill you, chances are you need to adjust your time frame. Either wait for the pullback on a smaller time frame, or analyze it from a bigger picture to get a better location. Or both. So remember, these diamonds outside the bars, the purple ones, when they work, when they produce an extension, it suggests that we are headed that direction. So once you get this bar, after this purple bar, especially at an apex like this, at a swing high, it's probably not going straight up anymore. It doesn't mean it's time to sell everything, but chances are we're not just going to get a huge rip right after that. Which means if you come back up here and they reject again, it becomes like almost like a head and shoulders kind of setup on the smaller time frame, and it works pretty often. I'm not going to chase it because I don't want to have a 25-point stop. But yeah, if they come up here and then they print like an orange bar again, that's worth trying. Also, if they come back up and they steal this high but reject above it, That's also a pretty great trade. But they could just cascade it down and I just miss it, which would suck because I was in the trade before, but it was just early, and I didn't want to take more than 10 points of risk. The good news is it's easily recoverable. The bad news is a lot of times it'll fail. All right, 8 minutes to close that 30-minute candle. So the algos are going to try to bring it back up here most likely before the close of the session because they know everybody watches these charts. And like I said, if they can get it closed inside the value area of this distribution here, it's probably going to squeeze hard. If they can't, the likelihood that we actually reject is significantly higher. But expect some kind of an attempt into the last few minutes of this session. And expect an attempt to take that high and close at the high, because that's just how they work. Like whatever, if they have an opportunity and it's within one voodoo range, like if you see a dashed line up here and there's not between this price and the dashed line, like you have like an important level like that, like a swing high or a swing low or yesterday's high or things that people watch, and there's a in range voodoo range level, like it's not way down here, right? It's there's no dashed line in between, but it's like here's your level, here's the voodoo range level. They can do it, like believe me, they can do it. If they want to, they can do it. Particularly in the direction of the trend. Like they could just rip this up with pink bars if they want it. If they can literally just like pull the orders. I talk about it like it's like a person or something. It's not. It's just like it's the result of liquidity based trading. It's not some crazy manipulation cabal, in my opinion. It's just the way markets work, and because they're all so systematic now, it's just a lot easier to see it. It's always worked that way. It's just usually it used to be people calling on the phone and they were always playing games forever. But now it's quite literally programmed into the system, so you see it more consistently. I wish it was as simple as just saying like you can just put your sell right here underneath the voodoo range and put your stop right above the voodoo range and it's always going to work. That'd be awesome, but nope. It doesn't work like that. Wish it did though. That'd be cool. But look at ES. Similar scenario. So see how this here. All right. So this here, we have to go smaller. I need to see the distribution down there. That is the magnet. Okay. Sorry, I forget. I'm on a big TV. You guys are. So this, see that high volume node right there? That little like spike? That's going to be the magnet if we can get in here. But from about here to here, that's all resistance. So we're in it right now. And there's a voodoo range level right in the middle. So guess where the algos, like all those algos are going to fight over that 39.54 level. And if they can spike and close over it on an important time, like an hour or some kind of set, like some time that people care about, like a market close or a session high, like after like all the things that people watch, right? Like 30-minute opening range, all of that stuff. If they can get a close above that important level here, the likelihood that we come back up to hit this distribution increases significantly, and they know this, so they will work hard and use all their profits to try to push it, because then they know that if they do it, they can get that extra extension. But because there's a voodoo range level in between our price and the magnet, the likelihood that we spike to the magnet is unlikely until we get a close over this. And that might seem obvious, but sometimes it might not be. Like, okay, here, this swing high was probably a magnet, right? When we started to spike up here, we had all this volume Tuesday morning. Like, look how they quit when they figure out that they can't break and hold above the voodoo range level, 39, 36.50. Somewhere in here, they tried, right? But somewhere in here, they all figured out, like, you know what? We're not going to make it. So they all give up. But then look what happens when they approach it again. They come up, they push really hard to make sure they close above that voodoo range level. And then does that spike get taken? Easily. So it's the exact same thing. Okay, so let's go to the 30-minute. Did we get it yet? 3 minutes. So here we're watching for basically a close on the high. And for NQ, we want a close above 11.335.75, which is looking unlikely. And it's always interesting to me to see how these indexes interact. ES usually leads things, but not always. Sometimes they act totally differently. But yeah, I would expect to spike into this session, the end of the session here, in the next 3 minutes. They should try. And what you'll likely see is this little dotted line will shift as well. Like, see how it shifted here? It'll do stuff like that. I don't know what direction, but it'll shift. Now, if they figure out that they can't take this, and I kind of think they can't, what we could do is we could see them decide, well, in that case, we're taking this one. But I think that volume distribution up high on NQ is acting as an easy magnet. So I think they want higher. Plus, that's just the direction of the trend, so it's going to be easier to go that way. Always assume that the robots are doing what they've been doing. They don't, believe it or not, they're actually a lot less sophisticated than you think. They learn constantly, but the systems themselves, the ones that are running all the time, they're not that complex because they have to run all the time. So, not saying I know how they work, but you wouldn't see these little anomalies if they weren't simple. So we'll see what happens here, and then if they're not going to move at all, I'm just going to go to bed because then there's nothing to do. Well, we got one win and one loss, and that's all right. You don't have to end every trading session at your high of day. It's okay to just say, hey, this price action's not for me. I'm going to save my energy for something better. Okay, so there's the close. They did not do it. So now that that pressure is off, let's see which way the market goes. Because now the pressure to close above that VR level is no longer there. So now we're going to see that when the pressure is relieved, which way the market goes, and that's going to give us a hint to which side they were pressing. It kind of looked like they were trying to go lower at the end there. So if they, what I'm expecting is that they go lower here, but if they suddenly rip now, then my thesis is wrong. So I'm expecting a drop here. Back into this probably, somewhere in here. I don't know how far. Gotta love just how freaking slow it is, though. Let's see. Yep, yep. No, I agree. I agree. I totally agree. I took the short earlier and it just didn't work out. But I agree. The yeah, pre numbers is the right time to fight the trend. I agree. You don't want to be short right into the numbers, but this is when you get those, like, what do they call them? Inventory corrections are really common before economic numbers. So yeah, I agree. Find time to fight the trend. Oops. But just be out of it before the number, please. Even if it's working, I don't risk giving away everything on some uncontrollable. I mean, unless you have some kind of insight to what the number's gonna be. I don't. That's not my game. So if you think you know what the number is, and you also know what the market's going to respond to that number, then feel free. But I do not. So yeah, not surprising. They're gonna let this breathe a little bit, and I bet that we're gonna get that dotted line to stretch. So here you're getting a decent setup where you've got the pink bar, the pink diamond getting beat when it's not at an apex. That if that does happen, it's usually a sign that there's actually some selling momentum. I mean, I guess I could take it again. I'd prefer to take it higher, but if that triggers, maybe I'll look for a pullback. Yeah, yeah, that's all right. I don't want to get more aggressive just because I took a stop, you know. So I've got to stay systematic, but seeing this bar fail is not bullish. If I still don't know if they save it here, then that is definitely bullish. But usually these X's get retraced, and they shouldn't need so much volume to get this kind of a lift right at support. And so getting it there and then breaking it means they're probably going to at least go another 8 points lower. But it's such a tiny time frame, you don't have good insight into what else is happening. Yeah. So, but look, see, it's a bulldozer. Like it's got the VPOC line, not it's in the body. See that? So it bulldozed through it, and it's a purple bar. You can see the wick is purple. So it's not quite as aggressive as it looks at first. But the orange bar beating the pink diamond is not bullish. Let me double check this higher time frame. Did we get? Yes. So we have confirmed now divergence to the high. So I don't think it's wrong to short. I think looking for the short here is probably a good idea. It's just a question of how high can you get it. How limited can you make your risk? I would have liked it better if all the volume was at the high here, but that's okay. It might mean we have to take this high one more time. That would suck. They're trying to hold that higher low. I doubt it happens. So anywhere in here is fine to short if you want. And I don't see a problem with it. Where's the VPOC on ES? Ugh, haven't done it. Haven't gotten there yet. Not confirmed on ES. And then the VPOC here is... Did we get it yet? Ugh. Tough. They are together. They did get it right here. So any retrace that gets rejected up there can be a short. And it's conservative to do it that way. So what we want is we want it to come and make a buy bar and then a sell bar, and then we can short it. But technically you could short this too. I want to see the wick of the bar I'm shorting. I'd like it to be up here, preferably. But you don't always get that. Especially to the downside. They like to rug pull. But the fact that they couldn't get volume, well, they haven't finished yet, but if they can't get volume below the VPOC on ES, they're probably going to go higher, at least for a little while. So I'm not gonna be super aggressive if those don't match. Another purple bar? So buyer's just giving up here. Okay. Well, that sucks. The cost of wanting to be conservative. Okay, so another purple bar. Nothing really to do with that. Other than wait. So yeah, see, we gotta be careful though, because if we go too low and then we bounce, they're gonna get momentum from drop shorts, making the trade less likely to work. In other words, if it goes too much lower, then I basically just if it hits my target already, then I just miss it. But yeah, getting like 3 purple bars in a row here would not be what I want. Boo. So divergent wave with a star here. So a purple bar coming after it would be an extremely aggressive but okay short for a squeeze or a liquidation. But we need another purple bar here. That's basically a breakdown trade. And if that would fail, I'd probably be done for the day because that's super aggressive. But it is in my plan to do it if the situation's right. I'd prefer that it was up here though. But the very next bar would need to be purple. And that would suggest a literal rug pull. I'd still prefer to get the short on a pullback. Remember, we did have it set up here, pink bar star with the purple diamond. It was here. I just didn't want to take it because I had already tried on the smaller time frame, and the stop, this wick is just so long. The idea of taking like a 20-point stop after that 10-point stop was just like, oh, I don't really want to be down 30 points. No thanks. So I talked myself out of it. Had that been a smaller stop, I probably would have taken it. But I figured I'd get a chance to short it back in that range, and they just didn't really give it to me. You had a moment here where you could have thought about it, but I wanted it back like up here, and it just didn't set up like that. Oh, are we gonna get the purple bar? I can show you. It usually works. It's a quick, aggressive scalp, but it usually works. I'd make that 10 points back most of the time. So it's at 88. Let's see. So here, no. Is it this
Order
one?
filled.
Oh shit! I did not mean to do that. How do I set the 88? Oh, is it here? Under the market. Okay. Well, we'll just leave it. I'll just add it 88. How's that sound? We'll just take it with 6. Why the fuck not? I'll show you. It's a pretty good trade. If it does not close purple, I need to immediately exit. But if it does, it can rug pull. Unfortunately, we've already had so many purple bars that it might not. But we'll try it. So I'll add an 88, and then I'm going to take almost all my profit at like 10 to 12 points. Just like real quick. And then we'll leave a little, maybe like one runner. Okay, 2. Ugh, it needs to close bearish, otherwise it's really not great. It needs to be purple. Fuck, it might not work. I might have to cancel the order. If they flip it over and it's not gonna be purple, I gotta cancel it because it technically was a misclick. Because I was trying to set the stop and it got me a market in, and I was like, well, it looks like it's still probably gonna work anyway. But if it's not gonna trigger, I need to not be in this trade. So let's see what happens when it goes bearish. If we can see it go bearish and it's not going to be purple, I need to get out. It'll warn me as soon as assuming it can get under the open. I should be able to get out for a scratch, I think. Yeah, see, so it's not going to be purple. So I want to get out of this trade because the better trade is probably not going to set up, or it can't set up. So I'm going to try to get out of this for a scratch. But I'm 4 points behind right now. I don't know if I'll get it. We would need I don't think they can do a purple bar. I could be wrong, but I don't think they can. See, that's going to be a red bar, which is aggressively short, or sellers, but not the exact setup that I want, and not something I can usually take for. Okay, 2 more points. Come on. That might be as good as I get. Come on. Yeah, they're not going to let me out. That's okay. I took a 2.5 point loss for a misclick. Because it can't be a purple. It can't be a purple bar now. So, okay, so now we're getting the retrace we want, which is good. So let's see if we can get a proper retrace and do this right, rather than trying to be sneaky and get a because the really the only trade that I can take as a breakdown is a dot with a star that's followed by a purple bar, or a pink bar going the opposite direction, which would be a blue dot with a white star, and it's got to be a clear momentum trade. But you can see when they fail, this can be devastating. So you don't want to hold on to it if you're wrong. I was probably lucky to get out of that for a 2-point loss, to be honest, because when they fail, they can be like, vroom. I'm lucky it didn't set up because I was about to take that a bigger size if it would have set up, but it didn't. I shouldn't have been in it at all, but I misclicked the wrong spot. I thought I was hitting stop buy, and it was a market buy. So to only cost me 2 points is lucky. Let me see if I can find one though. I'll show you how this works. It'd be blue dot with a star, or black dot with a star followed by. It doesn't happen very often. Blue dot with a star. See, it's not. It's got to be a pink bar right here. Technically, this pink bar works too because it's like, or sorry, this one because it's in the same spot as it needs to be, and you can take that breakout, but it's supposed to be the next bar. But I think it works the other way too. It's just got to be the right location. See, that's not bullish. It's here. Oh no, that's not the right one. That's a square. It does not happen very often. Okay, so black dot needs to be purple right after it, or else in its range. So this is probably okay, but you might get hit a little bit. Let me see if it's set up perfect up here. See, no. This one didn't have the star, but it still lifted a little bit. They don't show up very often. Yeah, see, without the star, you can get wrecked. Here, let's see. Did this one set up? Here. So we're going in the wrong direction. You don't take it as a reversal. Okay, there's no star there. But if this star was here, you could go this one and then purple, and then you'd get in, and you shouldn't even get this big retrace. It should just be drop. But the star needs to be in the right spot. It does not happen very often. So when it does, yeah, see, it's still not right. That's how rare it is. Just wish I could find one that actually set up right. It's got to be during a trend. So like at the no. Maybe on this time frame. Let's see. Doesn't look like it. Dot star pink lift. That was a little late, but still worked. See, when they're not directly connected, it's not always going to do much. Okay, so this one failed because it wasn't bearish, it was bullish. So you got to be careful there. If it's bullish, you're going to get wrecked. If you take the bear one. And honestly, seeing the bear one like not work is probably a setup in and of itself because it happens so rarely. No star. And see, this one was a pink bar, so that's not quite right. Does not happen often. Yeah, see this one, if this would have been pink, it's good to go. Pink was late. Wrong direction. Okay, here we go. Star dot pink. This low should hold. Star dot pink. That low should hold. Yeah. See that? And it just goes woo. Squeeze. It just literally happens like once a day. That's probably it. There might be a black one, but let's see. Extremely rare. That didn't have the pink bar. Black, no star. Shoot. Close. There may be some alternates that I just haven't figured out yet, but I know these right here. Star dot pink, as long as it's bullish, going higher. Look at that. So when they work, it works for like 50 points. And they're fast. No star here, you need to pull back first. Yeah. But notice, not only do they not, they just don't set, it's not like they fail a lot, they just don't set up very often. They don't fail very often at all. We've seen, I think, one failure, and it was because it was going the wrong direction. If you know how to read momentum, you won't do it the wrong way. But see, star dot needs to be followed by a purple bar immediately. And this, it does not look like it's in the purple. So, whew. All right, it's late, you guys. Yeah, let's see where this goes, but I'm gonna have to get some rest. Because I want to be able to trade tomorrow. And I got other stuff to do tomorrow too. And it's like 3 in the morning now, so I guess I could just stay up and sleep in the afternoon, but I would love for this to set up short though. God, that'd be nice. It's just taking forever. And now I'm concerned if it does pull back and set up, then I'm going to stay up for another 2 hours just to wait for it to work. So, I mean, that might have been it. Like, it might have just been these 2 bars and that's it. That would be too bad, but it's trying to bounce right off this low volume node. So, if it was going to cascade, you'd think it happened right here, you know? It's just slow because it's London. But I mean, it's picture perfect. It's exactly what it's supposed to look like. Just didn't set up how I wanted. And it stopped when it did set up how I wanted, so. But they've definitely got volume below the VPOC of the wave to the high, so I mean it can collapse. It can. But what I really wanted it to do was this and then that, because I wanted to risk less. Because there's really no reason to put your stop anywhere but above this swing. That's the only reasonable place to put it, really. See, now they're going to get purple bar followed by a green bar here if they close it bullish. And that'll be a trap back in. That's pretty strong. And this was a supernova, yeah. Yep. So, most likely this bounces. And technically you could buy a close here. It would only be a scalp, but you never know. I guess I could do that. Just for fun. It's got a close bullish. Ugh, it's not a great idea though. You've already beaten this. It's probably not so smart, but it's technically valid. At 301.50 basically, it would be. Let me just make sure here. I'm not missing something. Yeah, it can work. 301.50. And then your stop would have to go down at like 89, basically. I'll try it. Why not? I don't go to bed, regardless. So we'll do a little under 88. or under 8950. If they even get it. No, the only problem is I've got the VPOC here. You know what? It might not be so smart because I'm running right into this VPOC. So even if they shift volume up, they're gonna get stuck there. Never mind. I'm gonna skip it.
Order canceled.
It doesn't. It doesn't have the risk reward that I want it to. The setup might be right, but even if they close it here and I get long here, there's no target really, other than like right here. So, which means it probably won't set up bearish either, because it's just not going to be able to retrace. But what I was thinking is if I can ride it up here and then reverse it, but why even get fancy? They're not going to hit it anyway. I'm not even try. Oh. Gross. Well, good job if you shorted. I took the scratch because it didn't set up the way I wanted to, but looks like they want lower. Yeah, they're not going to retrace. Damn. Too bad. I needed to have that 10-point risk, and I didn't want to risk 20. But that's the choices we make. Cool. Yeah, I don't think it's going to set up. Darn. Right back into that low volume node, that orange area. I'm impressed that if they do just rip it right through there, I am impressed. I thought it would take one more rotation. And it might, but it's going to take 2 hours to do it, so. No setup long. I don't think I'd want to take it anyway. Yep. Well, I can't chase, so I guess there's just nothing to do other than sleep. I guess there's always sleep. There we go. Give me a pullback. Nope. They can't close a single bar bullish. Yeah, there's really nowhere for it to set up. I think I'm gonna call it because there's no real opportunity here. This won't be a long signal for me because I've got the target would be right here. So they might actually get the bar to close bullish, but I even if it's a star, it's like you just don't expect much from it after beating this one. Getting under this high volume one is a problem for bulls. And then if they do push it, then you'd be looking for the reversal. But uh, I need the reversal to set up here. So it needs to have two bull bars in a row now, or like one up and then one down and then two up would work too. But it looks to me like they're just gonna not let it go higher. I'd like to see them try to save this, but I don't think there's anything to do. And like I said, if I did short it, the only real place to put your stop is up here, and that's just a massive risk for futures that I'm not willing to take. And the risk reward wouldn't be very good anyway. Alrighty, well, too bad that one of them didn't work out, but at least we got one good trade. And I mean, it was on process, it was just aggressive. And the conservative trade just isn't setting up at the moment. It might set up still, but it's just taking so long that I'm like falling asleep. So um, we'll go back at it again tomorrow, right? It was one day at a time, and all you can do is just wait for the setups to do their thing and then execute them the way you're supposed to. I didn't really make any mistakes. Oh well, other than the misclick, but that only cost me 2 points. That happens. But I think both of the setups were fine. One of them worked, one of them didn't. I probably didn't manage them perfectly, but it's yeah, it just goes to show you can have all the tools in the world, but actually doing the thing you're supposed to do, it takes a ton of practice. Um, and yeah, it's almost like you have to relearn. I took a vacation 2 weeks ago, and it's taken a bit to get back into the swing of things, but it's good to have a full regular week this week. I think by next week, hopefully the markets start to act a little bit more normal and less like holiday markets, and we should get some better price action. And so I want to make sure that I'm ready for that and have my setups really solidified so I don't have to